friends, welcome to the channel JIV and CIV Made Simple. In this video, we are going to cover top 200 MCQs based on MSME certification examination conducted by IIBF. You will be able to see what are the important topics. You will be able to check out the which type of question are being asked, whether more case study based question, whether conceptual question, and all the question have been made from the updated syllabus, from the revised RBI circular. And if you want to get such PDF, unit wise theory, unit wise MCQ PDF, as well as practicing quizzes, you can WhatsApp me on the number shown on the screen. I request you to please take these 200 MCQs as a mock test, and you will surely find such question appearing in your upcoming MSME examination. So watch till the end, hit the like button, subscribe the channel for more such video. So let's get started. May not strictly require a complete overhaul or replacement to maintain the firm continuity. Option they have provided: when a partner is expelled for misconduct under the provision of the deed. Option B, when a minor previously admitted to the benefit of the firm elect to become a partner. Option C, when the profit sharing ratio changes among existing partners. And option D, when a partner dies and deed remains silent on the continuation of the firm. This is a very good question. What it is asking, that when does a partnership firm get reconstituted, but we may not need to replace the partnership deed to continue for misconduct under the provision of the deed. So what do you think about option A? See, expulsion changes. So basically, partner expelled for the misconduct. See, what is the main thing is that, expulsion changes the constitution of the partner. So the key point is, let me write it down. Any kind of expulsion, obviously it changes the constitution of the partner. Yes, constitution changes. So what happened, right, duties and sharing changes. Obviously, right, since constitution changes, so it will have impact on right, it will have impact on duties, it will have impact on sharing. So obviously fresh agreement is required for that. So it is not the correct answer. It is not the correct answer. What about option B? If you look at the option number B, it says that when a minor previously admitted to the benefit of the firm elect to become a partner upon reaching age 18. Yes, correct. B is the correct one. What about C? When the profit sharing ratio changes among existing partner without any admission or retirement. So if you look at the option C, so it is basically talking about, change in the profit sharing ratio. This is the key point. So please understand that this profit sharing ratio is the core of partnership firm. Right, let me write it down. So that is something, there is something that we call, profit sharing ratio. So this is the core of partnership, right? So even if partner remain the same, agreement changes. Agreement changes even if partner remain the same. So it requires new or revised deed. So obviously option number C is not correct. Right, option number C is not correct. So obviously it requires a new deed. Previously it cannot be worked like that. What about option D? When a partner dies and the deed remains silent on the continuation of the firm. So if you look at the option number D, it says law say that law say regarding partnership firm that any kind of death, it leads to dissolution. Death means dissolution if deed is silent. So to continue business, what happened? Old firm has to end, new firm has to start, right? And new deed is compulsory. So if you look at the option number D, this is not correct. So what we learned from this discussion is that minor already in, just upgrade, right? Minor already in, just upgrade. So what I mean to say that minor already admitted to the benefit, minor admitted to benefit, and turning 18, what happened? A status upgrade happened. Turning 18, a status upgrade happened. No outsider, no breakup, no fresh start. So when I say upgrade, it does not mean fresh start, right? So what we learned is that minor can be admitted only to the benefit, not full partnership. On attaining majority, 6 months he has to decide. If he want to continue, they become fully liable from the original admission date. Reconstitution does not always mean new deed. So remember, the key word is death plus silent deed. Death plus silent deed, it means dissolution. So I hope now it is clear that when we need to reconstitute, when we need to provide fresh deed, and when we need not provide fresh deed to the context of partnership firm. Now have a look at the question number 2. Question number 2 is on your screen. So basically what this question is all about, it is asking that following the devastation of the World War II, which nation implemented a highly centralized priority production system, shifting state resource toward coal and steel to trigger a miracle of export-led growth and high-tech industrialization? Italy, Germany, Japan, and USA. Very good question. So what this question is asking, So basically, this question is asking that after World War II, which country used a highly centralized government system to push money and resource into coal and steel first, and later into export and high-tech industry, creating an economic miracle? So the option have been given. So let me just take you through the concept that we have. So what happened after World War II? See, World War II completely destroyed the Japan economy. Yes, the Japan economy was completely destroyed. Factories were damaged. Fine. And resources were very scarce. Resources were scarce. Japan had to rebuild from zero. Yes, they have to rebuild from scratch. That's called zero. Right. Japan has to rebuild from zero. Now, what strategy did Japan follow? So Japan follow something called, developmental state model. Please remember it. We call it developmental state model. What happened here? Government did not leave growth to free market force. Government did not leave growth to free market force. Rather, what they did, that the government actively guided the economy. The government, they guided the economy. Right. So a special ministry was created that was called MITI. That is called, Ministry of, let me write down the full form. Sorry for my handwriting. Ministry of International Trade and Industry. This ministry was created. They played a key role. Now, you might have seen their word they have mentioned, that priority production system. What does it mean? See, Japan deliberately diverted resources toward basically what they did, they diverted the resources toward coal or steel. The question is why? Why do they divert? Because, coal means energy. Coal means energy. And steel means, infrastructure, machine, and, ships and factories. That is the meaning of steel. So these are, foundation industry. And once these foundation industry are strong, Japan moves into, see, these are the foundation industry, right? And once these industries are strong, Japan can easily move into shipbuilding. So they focus more on strengthening these fundamental, fundamental industry. So Japan go into shipbuilding, automobile, and electronic, right? So what was the result? The result was that this led to the Japanese economic miracle. Yes, it leads to, economic miracle. That's called miracle. See how miracle happened. So Japan shifted from, during the 1950 to 1973, Japan shifted from cheap irrigation goods to high quality, high tech product. Right. So instead of cheap irrigation good, they have high quality, high tech product. And introduce efficient system like JIT, just in time production. They become a global export powerhouse. So if you look at the option number C is correct. See why I told you this entire story, so that you can appreciate what Japan has done. Right. So option B is Germany. So Germany follows something called, ordo liberalism. So they focus on social market economy, competition plus welfare. Government did not centrally pick industry like Japan. USA followed a market-driven capitalist model. Government intervention were limited. No centralized priority production system. What about Italy? Italy is not the correct answer. See, so what we learn is that, MITI, M-I-T-I, it made Japan, right? Industry policy, technology and trade, industry miracle. If you have seen priority production, coal steel focus, export led growth, answer will be Japan. So Japan followed a developmental state model. Government actively guided industry. MITI played a central role. The first focus was on, coal and steel. Friends, before continuing to the next question, let me introduce you to our certificate course on MSME. So you can check out, if you want one complete solution for the entire MSME, you can check out our course. So in this course, you will get unit-wise theory and MCQ PDF as per the syllabus prescribed by IABF. So there is a separate folder I have created. I have divided the entire course in 6 modules. And inside each module content, you get unit-wise theory, unit-wise MCQs PDF. Not only that, in addition to that, you get previous year question. There are 8 files I have uploaded.
starting from February 2025 till now. And in addition to that, we provide you quick revision PDF module wise through which you can revise the entire content in very short time. So if you go through the entire content, this will help you revise it very shortly in a short span of time. So for more detail, you can check out the link in the description section, or you can WhatsApp 7 years from the date of its incorporation when the annual turnover of any previous financial year exceed 25 crore. Option C, it says that basically when the annual turnover for any previous year exceed 100 crore. And option D, option D says once the entity successfully lists its share on a recognized stock exchange, that is IPO. So first of all, let me explain how does the government define a startup? How does the government define a startup status? Fine. See, the government of India give a special benefit to a startup. Like, what kind of benefit it give? Like, tax exemption. Right. A special benefit which are provided to government to a startup, like, tax exemption. Then, easier compliance. Compliance is easy. And also, regulatory relaxation. Regulatory relaxation. Right. But these benefits are meant only till the company become enough. So what is the most important exit condition? Yes, there is a turnover limit. Please understand, there is a turnover limit. So as per the DPIIT gazetted notification, an entity will not be treated like a startup if annual turnover. An entity will be treated as a startup only if its annual turnover has not exceeded 100 crore. Right. So in the recent notification, there was a change. Let me explain. So a startup is recognized period up to 10 year. See, this is the change. Please note it down. Recognized period up to 10 year and turnover limit is 200 crore. Earlier it was 100 crore. Now it has been extended to 200 crore. Please note it down. Right. So this is the very important change that you must keep in the mind. Now let's come back to our discussion that we are discussing. So 200 crore, right? So annual turnover has not, if it exceed 200 crore, see, if this is the 200 crore is the benchmark. If it is more than 200 crore, not a startup, right? If it is below 200 crore, yes, this is a startup, right? And the moment turnover cross 200 crore, even once, a startup recognition automatically stop. So, and 10 years. So I think none of the option is correct. Actually, instead of 100, it will be 200. Option C is correct, right? What about a completion of 7 year? No, it is increased to 10 year. Actually, it is 10 year, not 7 year. Option B, turnover exceed 25 crore. No, that's wrong. That's wrong. 25 crore was the old limit. Now it has 200 crore. Now, once an entity successfully listed share on IPO, actually listing on a stock exchange does not automatically cancel a startup status. If age and turnover condition are met, a startup status may still continue. So D is also wrong, right? So option number C is the correct answer. Please understand. Now have a look at the next question. So please replace this 100 with 200. That's the correct answer. Now, following the Companies Amendment Act 2015, which of the following statement accurately describe the statutory requirement for a minimum paid up share capital of a private limited company in India? So basically, this question is asking, after the Companies Act 2015, what is the legal requirement regarding the minimum paid up share capital for a private limited company in India? Option number A says that, it must be a minimum of 1 lakh as per the section 2 subsection 68 of the Companies Act. B says that there is no minimum limit prescribed by the law allowing incorporation with any amount of paid up capital. C says that minimum paid up capital must be at least 10% of the authorized capital mentioned in the MOA. And D says that minimum of 50,000 is required provided the company has at least 2 directors. Very good question it is. So basically, the question is asking, after the Companies Act 2015, what is the legal requirement regarding the minimum paid up share capital for a private limited company in India? So this question is asked every time. Private company, public company, OPC. So you must have command over all these topics, right? So let me explain in the detailed way. So basically, what was the position earlier? So before 2015, section 2 subsection 68 of the Companies Act 2013 require minimum paid up capital. Minimum paid up capital of how much? 1 lakh for a private company. Please understand, for a private company it require minimum paid up capital of 1 lakh. So earlier no 1 lakh. So earlier it was no 1 lakh. So not correct incorporate. Now what happened in the year 2015? Please understand, the Companies Act Amendment 2015 made a big change. Of 1 lakh rupees or such higher paid up capital were deleted. So means that the law removed the minimum paid up capital requirement. So there was no minimum paid up capital requirement. Earlier it was, but now it is not. So a private limited company can be incorporated with 1 rupee, 10 rupee or any amount. So if you look at the option, so option number B is incorrect, right? Absolutely correct. So now you may ask me, what is the difference between authorized capital and paid up capital? So let me explain. So basically, please understand, when I say authorized capital, that means, the maximum capital a company can issue. This is the maximum capital that a company can issue, and usually kept on 1 lakh. It is usually kept on 1 lakh during incorporation, right? Reason is this is the MCA fee slab. Fine. Now what about the paid up capital? I told you paid up capital is the actual money, bought by the shareholder. It is the actual money bought by the shareholder, right? So no minimum prescribed by law. That's paid up capital. So practical minimum, please understand, a private company must have at least 2 shareholders. So a private company must have at least 2 shareholders, and each must subscribe to 1 share each. 1 share per shareholder. Each must subscribe to 1 share. So practically, if face value is rupee 1, so paid up is rupees 2. If face value is rupees 10, paid up is rupees 20. Fine. So actual, what I mean to say, that at least 2 shareholder is required, right? At least 2 shareholder is required, and each must subscribe to at least 1 share. So if you look at the option they have provided, option E says that it must be minimum of 1 lakh. No, that was a pre-2015. It was pre-2015 requirement. Earlier it has been changed. Option number C, 10% of authorized capital. C, no such rule in the Companies Act. D says 50,000 with 2 director. No. Number of director has no connection with the paid up capital. So remember, the trick to remember is that 2015 zero capital rule, right? Please understand, zero capital rule. Before 2015 1 lakh was required. After 2015 no minimum. So what we learned from this discussion is that Companies Amendment 2015 removed the minimum capital. Section 2 subsection 68 amended. Paid up capital, no minimum limit. Authorized capital is still decided for fee purpose, and practical minimum is the value of the subscribed share only. Now let's switch our focus on to the next question. The next question is on your screen. Very good question it is. So basically this question is asking that after the Companies Amendment Act, I think we have discussed it. Okay. So yes, this question is asking the transformation of Ludhiana. So basically, which international organization played the main role in transforming the Ludhiana nightwear cluster into a globally competitive, modern and smart industrial cluster? See, earlier it was called, Ludhiana nightwear cluster, and it has been diverse. It has been transformed into globally competitive is modern and smart industrial cluster, right? So this transformation has bowed down by which international organization? World Bank, UNIDO, IMF, WTO. So first of all, let me explain what is this Ludhiana knitwear cluster. Let me explain. See, LKC. So Ludhiana, Punjab is one of the India's biggest hub for knitwear, right? Or hosiery, or woolen garments. It mainly consists of SMEs. It mainly consists of a small and medium enterprise. So what problem did cluster face? Yes, these type of cluster, they face certain kind of problem. So before intervention, the cluster suffered from outdated technology, obsolete technology, then limited yarn variety. So they were having limited variety of yarn, low productivity was very abysmal, and lack of skilled labor. There were no skilled labor, and poor market was very poor, and export information. So individually a small unit could not solve this problem, obviously. So these were the problem, like outdated technology, limited variety, low productivity, skilled labor not there, market was very poor. Individually these small unit cannot solve this problem, so they cannot solve it. Fine. So what happened, in the year 1997, what happened, that UNIDO steps in, and they selected Ludhiana as the pilot cluster under the CDP. You know what is CDP? CDP is called, Cluster Development Program. cluster development program. So what did Unido actually do? See, Unido provided technical and developmental support, like basically technology upgradation guidance. Technology upgradation guidance. This Unido provided. Second thing they did was the yarn diversification support. Yarn diversification support also they provided. Third thing that they did is the skill development and training, skill development and training, market intelligence, promotion of collective efficiency. So Unido did not give loan but gave knowledge, system, global best practices. Please understand what Unido did. So remember, Unido never give loan. They did not give loan, but what they give knowledge. They give system. They give global best practices. What was the result? The result was that Unido was the Ludhiana become a globally competitive knitwear hub, shift from low value product to better quality export oriented garment. So yes, the correct answer is Unido, right? What about World Bank? So see, World Bank is not the correct answer. Why? Because it focused mainly on infrastructure, poverty reduction, government level effort. IMF deal with the balance of payment. They deal with the macroeconomic stability. WTO, this is the global trade rule. Fine. So it does not provide cluster specific development. So while Unido led the development, Indian institutions supported financing, like CDB. CDB supported financing, SBI supported financing. They provide credit facility, schemes like Mutual Credit Guarantee Fund. Right, I hope it is clear. This is the United Nations body, Unido Industrial Development Organization. United Nations Industrial Development Organization. So what we learned from this discussion is that Ludhiana Knitwear Cluster is a SME based industrial cluster. It selected in the year 1997, and program was the Unido Cluster Development Program, that's called CDP. Please note down the program name also. Sometimes this may be asked. And the focus was on technology, skill, yarn diversification, smart cluster, and yes, it transformed. What is the meaning of this word? See, balance sheet total, they have given 10 lakh. What does it mean? It simply means that this basic equation, that total asset is equal to total liability. So when I say total asset or total liability, it includes capital also, and long term liability, short term liability, everything. Now we have to identify the external liability. What is the external liability? Think about it. See, we have to identify what is our external liability. To solve this question, we need to identify, just wait a minute. External liability. You know what is the meaning of external liability? Which means amount payable to the outsider. Amount payable to the outsider, that's called external liability. Now look at it. So if you talk about this current liability, obviously it is a kind of outstanding external liability. If you look at this long-term debt, yes, it is a outside liability. So just add these two, current liability plus debt, right? So that becomes 5 lakh plus 2 lakh. That is equal to 7 lakh. You can check out now. Current liability 5 lakh, external debt is 2 lakh. So external liability is 7 lakh. Now, what we need to find, what the question is asking to find the net worth. And this equation we know, total asset is equal to total liability. Now we need to find equity before adjustment, right? See, first of all, we are talking about before adjustment. See, one thing I think you know it very well, that net worth plus total liability, external liability, right? And these two equal is the total asset. I think you are familiar with it. This is the very basic equation, and this is before adjustment. We have not done adjustment yet. What kind of adjustment? Just we will see. So on this basis, we can compute that net worth before adjustment is equal to total asset is how much? They have given total asset is, I think, 10 lakh. Yes, 10 lakh. So 10 lakh minus 7 lakh, which is 3 lakh. That is the net worth. So at first glance, owner fund appear to be 3 lakh, but they have given that on the asset side there is a profit and loss debit balance of 1 lakh. This also they have mentioned. So that's called, we have to adjust for this PL and debit balance, which is the loss. Yes, on the asset side we have to adjust for it. So before adjustment, this is the answer. Now we have to adjust. So basically what they have given, that profit and loss debit balance, they have given 1 lakh. What does it mean? And this loss is a kind of fictitious asset. It reduces the real worth of the owner fund. So the real net worth is, right, the question is all about the real net worth, which is equal to 3 lakh minus 1 lakh, which is the fictitious asset, which is 2 lakh. So the final net worth is 2 lakh. Sometimes what happens, in hurry we tick this 3 lakh and we get the incorrect answer, and after coming out of the examination we think that we have marked correctly. So actually you have not marked correctly, your concept is wrong. So first of all, try to understand this profit and loss debit balance is a kind of fictitious asset. It lowered down the value of the net worth. So the correct answer is 2 lakh. So what we learned is that net worth. So one simple formula you can remember to solve such kind of question is that net worth is equal to total asset minus outsider liability minus loss, right? So balance sheet total means total asset means total liability. External liability includes current and long term liability. Net worth is the residual interest of the owner. PL and debit balance is accumulated loss. Loss is a fictitious asset, must be deducted. And net worth must always be tangible. It will never be intangible. Now have a look at the next question. The next question is on your screen. Very good question it is. So which central government scheme help micro and small enterprise reduce the cost burden of outdated machinery by giving an upfront capital subsidy for adopting proven modern technology? Very good question. So the key point is, let me highlight, mitigate the financial burden of technological obsolescence, right, in the MSE sector by providing upfront capital incentive. PMEGP, TREDS, CLCSS, TIFAC. So actually this question want you to understand all of this technology, all of these schemes basically. So we will cover one by one. So basically the key point here is I am highlighted already, that is the technological obsolescence. So when I say technology obsolescence, what does it mean? It means the machine become old. It means machine become obsolete, outdated or inefficient. And obviously since machine become old, so what will happen to the production cost? It will go up. And what will happen to the quality? It will go down. So this is a major problem for major MSE. Yes, all MSME faces this problem, right? As new machinery is expensive. So what the scheme solve it? Yes, the name of the scheme is CLCSS. What's the full form? Credit Linked Capital Subsidy Scheme. So this is the flagship technological upgradation. Please note it down. We have already discussed this point. This is the kind of technological upgradation scheme. So the government give a capital subsidy of 15%. Let me write it down. So what government does here, they give a capital subsidy of how much? Of 15%, right? This subsidy is given for what? This subsidy is given for replacing the old machine. Fine. Installing the modern and energy efficient high productive technology. It applied to 51 subsector. Yes, there are 51 subsector where it apply, which may be textile, which may be pharmaceutical, energy, engineering goods. So the subsidy is upfront, which directly reduces the cost burden, right? Subsidy is upfront, which directly reduces the cost burden. So if you look at the option, yes, option C is correct one. Yes, C is correct one, CLCSS. If you talk about option number A, that is PMEGP. So what PMEGP is all for? That is Prime Minister Employment Generation Program. So remember, it is meant for starting the new micro enterprise. If you want to start new micro enterprise, then we have PMEGP. Setting up new micro enterprise, generating employment. What about TREDS? I think you know it very well. This is a trade receivable discounting system. This is an online invoice discounting platform. It improved cash flow. What about TIFAC? TIFAC is wrong. It is an autonomous body under DST. It focuses on technological forecasting, technological assessment. So CLCSS means change the latest costly system with subsidy. Right? That's the point. That is all about CLCSS. Now, next question we have. So friends, when the question is, when the bank give pre-shipment or packing credit facility under the running account facility, let me highlight it. This is a very important point. Running account facility. Bank is providing the pre-shipment or packing credit under the running account facility without asking for export document upfront. So when I say running account facility, they don't without prior submission of the document. So what document must the exporter ultimately submit to justify the loan? So what happened? Under the RBI guideline, pre-shipment is sanctioned to exporter to finance the working capital requirement prior to shipment. You know it very well. So bank can also grant running account pre-shipment credit without prior submission of document with good track record. However, the exporter must produce the dash with the maximum period of 365 days. Right. Otherwise, to avoid the facility being treated as ineligible. So what they have to submit? So basically, first of all, let's understand what this pre-shipment or packing credit is all about. Either you call it pre-shipment or you call it packing credit. See, it is like a working capital loan. It is like a working capital loan given to the exporter. Fine. The purpose is to purchase the raw material. The purpose is to process and manufacture good. The purpose is to pack the good before shipment. The purpose is to pack the good before the shipment. And it is granted before the export happen. Now you may ask me, what is this running account facility? Let me explain. That is called running account facility. So normally bank asks for LC. Normally bank asks for export order. So bank asks for letter of credit, export order before granting the packing credit. Before granting packing credit, bank asks for LC and export order. But for reputed exporter with good track record, bank may allow running account packing credit. So it means that credit is given first. It means credit is given first and documents are submitted later. First of all, you give the credit and then document will be submitted. So this is a kind of relaxation. This is a kind of relaxation. This is not a waiver. So what is the compulsory requirement? That even under running account facility, the exporter must ultimately produce the letter of credit and confirmed or firm export order. Fine. So what I mean to say, that even under running account facility, the exporter must produce these two things. Either they have to produce this a letter of credit or confirmed firm export order. Why? Because of the nexus rule. What is the nexus rule? RBI says that every packing credit must have a direct nexus with the real export transaction. So this nexus is legally established only for LC, only by LC and firm export order. And there are time limit also there, 365 days maximum. Right. Packing credit must be adjusted by export document or converted into post shipment credit. What if LC or export order is not produced? So obviously if LC or export order is not produced, bank will do what? Bank will charge commercial rate of interest. Bank will charge commercial rate of interest, not concessional export credit line, if it is not produced, and withdraw the running account facility. They will withdraw it. Fine. So if you look at the option that they have provided, so option number A is correct. Yes, these two are required. B is not correct. Bill of lading is issued after the shipment using the post shipment finance. So the bill of lading is used in the post shipment finance. Bank guarantee. So bank guarantee provides security. It does not provide an export transaction. And so remember, packing credit require proof of packing, and LC is a good proof of packing. So either LC or firm order. No LC, no nexus, no export credit benefit. And running account means no document. Fine, please remember it. Now friends, the question is the SARSAI. It is asking, under which law does the SARSAI get the legal power to maintain a central database of security interest? Under which law? 4 options have been given. Very good question. So why was SARSAI needed? First of all, let's go through the history. Why do we need SARSAI? See, earlier there was a problem in the banking system. Like borrower could create equitable mortgage. Borrower could create equitable mortgage, deposit of the title deed, take loan from bank A, right? Take a loan from bank A, then again mortgage the same property with bank B. The result was fraud. The result was NPA. So they could make equitable mortgage, take loan from bank A, again take loan from bank B. So no central record was there. Multiple loan on same property. Result is fraud and NPA. To stop this, a central registry was required. And which law created this mechanism? The SARFAESI law created this mechanism. That is called SARFAESI Act 2002. So under chapter 4 of the SARFAESI Act, government was empowered to set up a central registry. So government was empowered to set up a central registry. So this registry record mortgage, charges, hypothecation. So this has to record the mortgage, charges, hypothecation, and any kind of security interest. Fine. So this registry is called SARSAI, Central Registry of Securitization, Asset Reconstruction and Security Interest of India. So it maintains a publicly searchable database. It allows bank and FI to check whether a property is already charged or not. It applies to individual, firm and company. So if you look at the option number A is BRA. No, that's wrong. That will be the licensing of the bank. control and supervision of the banking business. Option number B is B says, Companies Act 2013. This is also wrong. Because it provide for the registration of charges only by company. The correct answer to this question is, SARFAESI Act. C number is correct. For very first question, the question is, under the Limited Liability Partnership Act 2008, which of the following statement best illustrate the hybrid nature of an LLP and its divergence from traditional partnership? Option they have mentioned, like an LLP required minimum of 2 partners with a maximum cap of 50, ensuring it remain a small scale entity under resource dependency theory. Option B, all the partners in an LLP must be resident of India to maintain separate legal entity status and perpetual succession. Option C, it combines the operational autonomy of a partnership with a special legal entity where partner personal assets are protected from business liability. Option D, the liability of DP is unlimited to mitigate agency risk while general partner enjoy limited. So friends, let's look at the option number A. So first of all, let's understand the question, what the question is all about. Let's first understand that. So the question is asking why LLP is called a hybrid entity and how it is different from traditional partnership. So focus on the keywords. The 2 keywords they have mentioned is the hybrid entity and the how LLP is different from divergence from traditional partnership. So first of all, what is LLP? First of all, let's understand the core concept. So you know it very well that a limited liability partnership is called hybrid. Why it is called hybrid? Because it mixes feature of 2 business form. It mixes feature of partnership, right? So partnership have flexibility. P as a hybrid. So it is called hybrid because it mixes feature of 2 business form. On one side we have partnership. So for partnership it ensure flexibility. It give flexibility. It have internal management freedom. For partnership we have internal management freedom. While if you look at the company, so on the other side we have company. Company have a separate legal entity. Company is a separate legal identity, right? And also limited liability. Liability get limited. So from partnership it get flexibility. From company it get separate legal entity. So LLP is neither a full partnership nor a full company, but a blend of both. That's why this is called hybrid. Now let's look at the option. Option number A says that minimum 2 partner and maximum 50 partner. So LLP does not require minimum 2 partner. That is wrong. But there is no. So yeah, LLP yes required. Yes, it required minimum 2 partner. Yes, minimum 2 partner is required, but there is no maximum cap. So it is not like that only 50 partners would be there in max. So that's why option number A is wrong. What about B? It says that all the partner must be resident of India. The LLP Act require only one DP to be a resident in India. This is a very important thing to remember regarding the LLP, because if you look at the examination pattern, one question is LLP is sure short. So I will not only cover those things which have been given in the option, I will cover something else also. So LLP should have only one DP designated partner to be resident in India, to be Indian resident, right? LLP to be have only one DP to be resident in India. So not all the partner. That's why option number B is also wrong. What about C? It combines the operational autonomy of a partnership with a separate legal entity of a company. Exactly. C is the correct one. This is 100% correct, because LLP works like a partnership when it has flexibility, when it has autonomy, and LLP has a separate legal entity also, which is different from partner. So partner personal assets are protected. Right, partner, because company is a separate legal entity. Similarly, LLP is a separate legal entity. So partner personal assets are protected and liability is limited only up to agreed contribution. So this perfectly explains the hybrid nature. What about D? D says that designated partner have unlimited liability. You can see they have mentioned that designated partner have unlimited liability. What do you think? So this is wrong. In an LLP, all the partner, including designated partner, they have limited liability, because the full form itself says limited liability. Right, unlimited liability apply only in the case of fraud. So option D is incorrect. So this option number D is incorrect, right? So what we learned from this question, correct answer is option number C. So one trick to remember, let me give you a trick also, so you can remember it like this. LLP is equal to P plus C. P means partnership. P means partnership. Partnership style working is there. Plus C means company. Company advantage is also there. Company advantage is also there. So we have limited liability, which is the advantage of company, right? Limited liability plus separate entity, which is the separate entity. Limited liability plus separate entity, right, combined together. So it work like a partnership, but it protect like a company. So what we learned is that, LLP is a separate legal entity. Partner's liability is limited to the contribution. No maximum limit on partner. Only one designated partner must be Indian resident. And LLP is a hybrid of partnership and company. That is what we learned from this question. Now, let's come to the question number 2. Question number 2 says, considering the interplay between the Indian Partnership Act and Companies Act, which of the following statement describe the constraint and theoretical rationale for membership limit in Indian partnership? So option A, Indian Partnership Act mandate a maximum of 50 partner to ensure that firm remain small enough to be managed under agency theory. Option B, while the 1932 Act is silent on upper limit, a cap of 50 is imposed by the Companies Act via Rule 10 to prevent unmanaged risk and to encourage a scalable entity to transition into corporate structure. Option C, all the forms of association for profit, including HUF and professional firm of chartered accountant, are strictly capped at 50 members. Option D, partnership are capped at 50 members primarily to ensure that they have enough resource to complete and with a large company under resource dependency theory. So this question is testing two things. Which law fixes the maximum number of partner in Indian partnership? Right, which law fixes? For answering this question, let me take you to our certificate course on MSME. If you are looking for only one single course where you get entire complete discussion regarding the theory, regarding the MCQs, you can check out our course on certification course on MSME. In this course, you get unit-wise theory and MCQ PDF, which is compiled module-wise A, B, C, D, E, F. And inside each module, you get unit-wise folder like this. Inside each unit-wise folder, you get theory PDF and MCQs PDF. And it cover all the important concept as per your Macmillan book, as per your reference book suggested by IIBF. In addition to that, we have previous year question paper also, which we have collected from memory based question from as aspirant we have appeared in the examination. Plus we have some quick revision PDF also for last this particular number also. So now let's come back to this question. So friends, first of all, this question is testing two things: which law fixes the maximum number of partner and why this limit exists. So first of all, let's have a basic legal understanding. So you know it very well that if we talk about the Indian Partnership Act, right? So Indian Partnership Act 1932, right? So this act, it tells that minimum partner is 2, but it does not mention any maximum limit. So the maximum of 50 partner, it actually comes from, section number 464 of the Companies Act. It tells that the maximum number of partners should be 50, and also the Rule 10 of the Companies Act. So legally, Partnership Act is silent and the Companies Act set the cap. Now let's look at the option. Option number A, it says that 1932 Act mandate a maximum of 50 partner. No, it is wrong. Actually, 1932 Act never fixes the maximum number. This limit comes from the Companies Act. Option B is the correct one. Yes, while 1932 Act is silent on the upper limit, the Companies Act imposes a cap of 50 to control risk and push a scaling firm to become companies. Yes, option number B is the correct one. This option is legally and theoretically perfect because correct law is identified, correct reasoning has been explained, large businesses are encouraged to convert into company structure, enjoy better governance and investor protection. What about C? C says that all the profit making organization including HUF and professional are capped. Actually it is wrong. Why? Because exception is there for HUF business. Exception is there for some professional firms like CA, for lawyer. So these are governed by a special statute, right? So they are governed by a special statute. So option C is wrong. What about option D? Option D says that cap ensure enough resources to compete with big company. Actually opposite logic is there. The cap exists to prevent the mismanagement, avoid agency problem, maintain a small scale flexibility. So the final answer is option number B. So what we learned is that silent P but a strict C. Silent P but a strict C, which means Partnership Act is silent on maximum and Companies Act is cap as 50. So the key learning is that what is the minimum number? So minimum number is how much? Minimum partner is 2. Maximum partner is how much? 50. Section number 464 plus rule number 10, it set the limit. The purpose is to reduce the agency risk, to avoid unwidy management and to encourage the corporate structure. Let's have a look at the question number 3. Question number 3 is about the liquidity analysis. So basically, a tech startup has the following balances at the end of the financial year. Current year is 12 lakh rupees, and which include 4 lakh in inventory and 5,50,000 in prepaid insurance. Current liability is 5 lakh. Cash and cash equivalent is 1,50,000. So now you have to calculate the quick ratio and to evaluate the firm immediate working capital position related to the ideal standard. Four options they have given, like quick ratio 2.4, quick ratio 1.5, quick ratio 0.3, quick ratio 1.6. And also option number A says that the firm significantly exceed the ideal 2:1 current ratio. B says that firm exceed the ideal 1:1 standard. C says firm is at risk as it fall below the 1:1 cash ratio requirement. And D says that firm is below the ideal 2:1 threshold. Very good question it is. So this question is not asking about current ratio, but about quick ratio. And you know what is the other name of quick ratio? So the other name of quick ratio is also called the acid test ratio. So sometimes question may be asked that what to calculate the acid test ratio. So both are the same. So the focus is on immediate liquidity. The focus is on ability to pay current liability without selling the inventory. Especially important for a startup where cash flow can be unstable. So some formula that we must know, that quick ratio is equal to quick asset upon current liability. And what is the quick asset? Quick asset is the current asset minus inventory, and also you need to subtract the prepaid expense. Now you may ask me why we have subtracted. Because you know inventory takes time to sell and prepaid expense are already paid and cannot be used to pay the liability because they have already paid. That's why we need to subtract these two. Now let's first compute the quick asset. So current asset is 12 lakh, 4 lakh is inventory, 50,000 is prepaid. So just write 12 lakh minus 4 lakh plus 0.5 lakh. So this become how much? This becomes 7.5 lakh. That is your quick asset. Now compute the quick ratio. Very simple to compute. Quick ratio is equal to quick asset upon current liability, which is equal to 7.5. And what is the current liability? 5 lakh. 7.5 upon 5. That give you 1.5. Now interpretation. You know what is the ideal quick ratio? You know it very well that ideally quick ratio should be 1:1. Ideally. It is just sufficient. And if it is greater than 1, it is a comfortable position. Comfortable position. And if it is less than 1, it means liquidity stress is there. So here 1.5 we got, which exceed 1. So this startup can easily meet immediate obligation. So no need to depend on selling inventory. So if you look at the option number A says no. 2.4 no. 1.5 yes. The firm exceeds the ideal 1:1 standard, indicating a strong immediate liquidity. Exactly. B is the correct one. Rest option are wrong. So what we learned from this discussion is that quick asset is equal to CA minus I minus P. Quick asset, CA means current asset, I means inventory, P means prepaid expense. And then you need to divide by current liability. No inventory, no prepaid, only real money is counted. And what is the ideal quick ratio? Ideal quick ratio is 1:1. Higher quick ratio, lower liquidity risk. Simple thing is that if quick ratio increases, liquidity risk decreases. Right, please understand. Now have a look at the next question. MSME in the manufacturing sector report the following. Total debt is 45 lakh, shareholder equity is 30 lakh, and earning before interest and tax EBIT is 12 lakh, interest expense is 9 lakh. We have to compute the debt to equity ratio and the interest coverage ratio according to the resource based theory of the solvency. Is the firm long term funding sustainable? Some option they have given like DE 1.5, DE 0.67, DE 1.5. This way they have given the 4 option. Now let's see the basic. So this question combine number plus interpretation plus theory. We have to compute the DER, we have to compute the ICR, interest coverage ratio, and to decide whether the firm long term funding is sustainable under the resource based solvency theory. First of all, let's write the correct formula for DER. So DER formula is total debt and divided by shareholder equity. Total debt divided by shareholder equity. And what is ICR? ICR is EBIT upon interest expense. ICR is EBIT upon interest expense. So basically why we use EBIT? EBIT is used because interest is paid before the tax. Interest is paid before tax. That's why EBIT is used. So we compare earning before interest. Now let's first of all compute DER. How to compute DER? Debt they have given how much? You can see debt they have given 45 lakh. Equity they have given 30 lakh. So it is 45 upon 30, which is how much? Which is 1.5. So it means that for every 1 rupee of the equity, the firm uses 1.5 of the debt, indicating high dependency on the borrowed firm. Now let's compute the ICR. How to compute the ICR? ICR means EBIT upon interest expense. Right. So what is EBIT? EBIT also they have given 12 lakh. So 12 lakh in the numerator and interest expense 9 lakh in the denominator, which is equal to 1.33. So it means that the firm earned rupees 1.33 for every 1 rupee of the interest obligation. Right. That is called interest obligation. The firm earned rupees 1.33 for every 1 rupee of the interest obligation. It means it can pay interest but with very little safety cushion. Right. So what are the ideal coverage ratio? See, safe zone is 1.5. Above 1.5, safe zone. Below 1.5, risk zone. So what we are getting? We are getting 1.5 exactly. And below 1, it becomes danger zone. So now actually we are getting 1.33. So this is a risky zone. And what does this resource based theory of solvency say? This resource based theory of solvency says that a firm must generate sufficient internal resource not just to pay today's obligation but to withstand the shock and instability. Even though interest is covered, the margin of safety is very weak, making long-term funding unsustainable in adverse condition. Even though interest is covered, but margin of safety is very weak, making long-term funding unsustainable. Right. So option number A says that D ratio 1.5 exactly. ICR is 1.33 exactly. Firm is considered unstable. Yes. So A is correct. So please remember, debt divided by equity is DER and EBIT must be at least 1.5 times the interest expense to sleep peacefully. No safety cushion. Right. So what we learned? Debt equity ratio, so capital structure risk. Interest coverage ratio, so repayment risk. Ideal coverage is above 1.5 for ICR, interest coverage ratio. Please note
self-employment through micro enterprise implemented by KVIC when with eligibility requiring individual above 18 years. Option B says that PMEGP provide only loan with no subsidies and focus solely on agriculture employment generation. Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under other government scheme. Option D says that PMEG offer a flat 10% subsidy for project costing below 5 lakh regardless of the location or category. So these are the 4 options given here. Let's start with the option number 1. So let's look at option number 1. Option number 1 is correct. Yes, this one is correct. Why? Because PMEGP was created by combining 2 schemes, right? So there was first scheme was called PMRY. Okay, this PMRY was merged with, this is called Prime Minister Rozgar Yojana. It was merged with REGP, which we call Rural Employment Generation Program. And then after merging, this PMEGP is evolved. Okay, the idea is simple, to help the people. What was the idea? To help the people, right? And they start their own small business and micro enterprise, right? So this is the point. And who implemented? KVIC implemented, which is the Khadi and Village Industry Commission, with support from, so they get support from state office, right? They also get support from banks. Now eligibility, I told you, you should be above 18 years of age, minimum 18 years, right? With 18 years of age and should have minimum education required. So for example, suppose there is a 20, let me give you one example. Suppose there is a 20-year-old student, right? 20-year-old student with basic schooling. Now he want to open a tailoring unit, right? He want to open a tailoring unit, or he want to open a small service business, so they can apply under PMEGP. So these are the keyword point you must keep in the mind. Let's look at option number B. Option number B says that it provide only loan with no subsidy. That is wrong. PMEGP is not about agriculture. It's related solely, no, this is wrong. It is not about agriculture. It's about, non-farm micro enterprise. Let me write it down. Right. It about, non-farm micro enterprise. Non-farm micro enterprise. Right. Like a small shop, workshop or service unit. And, it provides both loan and subsidy. Subsidy can range from 15% to 35%. Depending on the location and category of the beneficiary. So this option number B is completely misleading. What about C? Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under the other government scheme. So this is again wrong. Why? Because existing enterprise that already got subsidy from other government scheme, they are not eligible. PMEGP is only for, remember, it is only for new project. See, I am writing these things are very, very important. Remember, this is only for new project. Okay, for example, if someone already took a subsidy under Mudra Yojana, they cannot come again and claim under PMEGP for the same unit, right? What about option D? Option D says that it offer a flat 10% subsidy for project costing below 5 lakh regardless of location or category. So this is also wrong. Subsidy is not flat 10%. It changes depending on whether the person is from general category or from a special category like SC, ST, women, differentiable. So subsidy can range from 15% to 35%. Right. So let's take the quick summary of what we have discussed here. So this is all about PMEGP. So it is a merger of two schemes, PMRY and REGP. First point. Second point is that focus is to create self-employment. That is the focus. What is the focus? Focus is for creating the self-employment. Then I told you it is implemented by KVIC plus bank. Eligibility is more than equal to 18 years, right? Plus minimum education. Project limit is 25 lakh. This question is also asked. What is the limit? 25 lakh manufacturing and 10 lakh for services. This limit is also been asked. Remember, project limit is 25 lakh for manufacturing and 10 lakh for services, and subsidy range from 15 to 35%. This range depending on the location and category, and existing unit with subsidy not eligible for it. So friend, always remember this point that PMEGP is for new small businesses, right? It is for new small businesses in non-farm area, helping youth and artisan to become self-employed. That is what PMEGP is all about. Everything has been written here and I have summarized all the things. If you think that this content is useful for your preparation, please hit the like button. This will motivate me to make more such content. Also, you can share the content with your colleague who are preparing for this examination. It will be quite beneficial for them also. For your information, let me tell you that if you want to prepare, if you want to practice some quizzes based on MSME, you can join our Telegram channel. In the description section of the video, you will get the Telegram channel. You can join the Telegram and attempt many quizzes which are completely free of cost. Now friends, let's look at the next question. So what was the primary objective of the Pradhan Mantri Task Force? Yeah, this is a very good question. Pradhan Mantri Task Force constituted for the MSME sector development. What was the primary objective? Option A, to promote export of MSME product through international marketing agency. Option B, to reflect on issues raised by MSME association and formulate a comprehensive agenda for action. Option C, to develop policies solely focused on labor law reform in the MSME sector. Option D, to provide direct financing assistance to MSME without any structural reform. Very good question it is. So let's discuss this particular question. Let's look at option number A. So if you look at option number A, this is too much narrow. Export are important, but the task force was not made just for export. It has a much bigger agenda. The agenda was much bigger. Not only marketing, but also credit, labor, infrastructure, skill development. So export was only one small part, not the full object. Option number B, yes, this one is the correct one. Because the task force was formed after the Prime Minister met with the, see what happened, let me tell you the history also. Basically our Prime Minister, they met with the MSME association, right? They met with the MSME association who highlighted many problems. Problem where that, credit where was not available. Marketing channel was weak. Labor law was complicated. And infrastructure better was needed. Infrastructure better was required. Skill development was one reason, right? So even a smoother exit policy for field business. So the task force divided this topic into group, right? What the task force did, these are the topics, right? And they divided this topic into group, okay? And worked on recommendation for each group. They work on recommendation. For example, imagine that there is a small textile unit in a town. It has struggled with the loan approval, faces tough competition in the marketing, and lack a skilled worker. So the task force wanted to fix all this problem together, not just one. That's why they group it, and then they work on the recommendation. Now option number C says that to develop policies solely focused on labor law. It is again wrong. Labor law reform was just one part. Yes, this was one part of this. If the task force only focused on labor, it would miss bigger issues like credit and infrastructure. Option D says that to provide direct financing assistance to MSME without any structural reform. This is also incorrect. Why? Because the task force did not give out money directly. Instead, its job was to study the problem. First of all, they would study the problem. After studying the problem, they will recommend the changes. So the correct answer to this question is option number B. So let's quickly summarize the keyword which we have discussed regarding the task force. So task force was created after the PM met MSME. First point I told you, PM and meet MSME association, then task force was created. The goal was to solve the multiple issues together. The goal was to solve the multiple issue together. It was divided into subgroup, right? This task force was divided into subgroup like credit, marketing, labor, infrastructure, right? Exit policy, skill development, and it was divided into subgroup for focus solution. Recommended setting up PM Council on MSME. So it set up PM Council on MSME, right? It was set up, right, to monitor the progress. So friend, remember the Pradhan Mantri Task Force for MSME was all about 360-degree solution. It was all about 360-degree solution for small businesses, not just one area. I hope this clear your confusion. Now friends, let's look at the next question that we have. The next question that we have is as you can see on the screen. So it says that what is the full form of CGT-MSE and what is its primary objective? Very good question it is. CGT-MSE full form and the primary objective is being asked in this question. So options are credit guarantee trade management service for enterprise to provide marketing support to SME. B. Credit guarantee fund trust for micro and small enterprise to provide credit guarantee to financial institution for loan extended to MSME. C. Credit goods and trade management services for entrepreneur to provide subsidy on trade loan. D. Commercial guarantee trust for micro and small entity to finance large scale industry with collateral security. I hope you know the answer very well, right? So the option number 1, option number A is wrong. First of all, the full form itself is incorrect. CGT-MSE does not stand for trade management service. No, this is wrong. Second thing is that it talk about marketing support. See, CGT-MSE is not about marketing. It's about loan guarantee. CGT-MSE is about loan guarantee. Like marketing support is given by other government scheme, but CGT-MSE focuses only on finance. Yes, B number is correct. This is the correct definition. Credit guarantee fund trust for micro and small enterprise. Remember the full form. Sometimes question will be asked that what does E stand for, what does T stand for. So you should know the complete full form. And if you talk about the CGT-MSE, let me elaborate a little bit about it. So you must know that CGT-MSE, it was set up by MSME Ministry plus SIDBI. Remember, SIDBI is also involved in setting up the CGT-MSE. What was the purpose? The purpose was to help the small business get loan without collateral. Get loan without collateral. How? So bank normally ask for property or other asset as security. Many small entrepreneurs don't have that, right? Because bank, whenever these small businesses go to bank for loan, bank asks for something as collateral, and normal business don't have that. So CGT-MSE give a guarantee to the bank so that even if the borrower fail, the bank is protected. This makes bank more confident in giving the loan. Let me give you one example to make it more clear. For example, let's suppose there is a young entrepreneur and he wanted a 10 lakh rupees loan, right, to start a repair workshop. He wants to start a repair workshop for which he need 10 lakh rupees note. But he has no land, he has no property to mortgage. With CGT-MSE, the bank can still give him the loan because the scheme guaranteed. I hope it is clear. Now, let's look at option number C. Credit goods and trade management scheme, completely wrong. And CGT-MSE does not provide subsidy. Here it is just subsidy. No. It has nothing to do with subsidy. It is a kind of credit guarantee. Option number D is also wrong. Right. Large scale industry are not covered here. Remember, large scale industry, they are not covered here. And it is meant for collateral free loan. So the correct option is option number B. So what we learned from this question is that full form, first of all, full form is clear. Credit guarantee fund trust for micro and small enterprise. Second thing is that who set up? MSME and SIDBI. Both of them combinedly set up. The purpose is to help the MSE, not large enterprise. The purpose is only to help the MSE, micro and small enterprise, to get loan without collateral or third party guarantee. How it work? It work by giving bank a guarantee cover. And it apply to manufacturing and it apply to the services. Right? Remember it. And it is not about marketing and not about subsidy, not for larger industry. So friends, always remember CGT-MSE is like a safety net for the bank so that a small business can get loan easily without pledging the property. Friends, if you are looking for a study material for this MSME examination, you can WhatsApp me on this particular number because we have almost 5 to 6 previous year memory question based PDF available in the course. Also, we provide you 2000 plus MCQs for practice purpose. Along with that, module wise quick notes, unit wise quick notes, which will immediately help you in your upcoming examination. And many people have qualified the examination using our material in their first attempt itself. If you want also to qualify using, increase your efficiency, having net low input and maximum output, then you can check out the course. The course link is provided in the description section of the video. I hope every aspect about CGT-MSE is clear. Now let's see the next question that we have. Yes, very good question. This question asks you the definition of the angel investor. So question is regarding that as per the CV Alternative Investment Fund, we call it, in short, we call it AIF. As per the CV AIF Regulation 2012, which one of the following correctly describe an angel investor? So this question is regarding the angel investor, right? Option number A says that individual with a net tangible asset of at least 2 crore, excluding principal reputed residence, or is a senior management professional with at least 10 years of experience, or a buddy corporate with net worth of at least 10 crore. Option number B says that any individual willing to invest less than 25 lakh in a startup without an asset or experience criteria. Option C, only venture capital fund with asset over 10 crore investing in large stage venture. And option D says that individual investor with net worth over 50 lakh irrespective of the investment experience. So if you look at the option number A, we question is asking about angel investor. Yes, option number A is the correct one. This one is the correct one, right? So remember some criteria. Let me explain. So this is the correct definition. First of all, and if you talk about the angel investor, so you must know that he is an individual, right? He is an individual. He must have asset worth at least 2 crore, not counting their home. Plus, they should have an experience. They require experience. Experience like invest. They must have invested in a startup before, right? Starting multiple business. They must have experience of starting the multiple business, right? Serial entrepreneur we call it, or they must be in the senior management role. They must be in the senior management role for at least 10 years. If either of these, then they're called what is the term that we're talking about here? Angel investor. Okay. Now, third thing is that buddy corporate. Yes. If we talk about the buddy corporate, so that company with, so if for individual, this is the criteria. For buddy corporate, which have at least 10 crore net worth, can also be angel investor. Now let's talk about the funds. Even AIF, Alternative Investment Fund, or VCF. It is called Venture Capitalist Fund, registered with SEBI. They also qualify. So see, individual, in context of individual we have discussed, in context of buddy corporate we have discussed, in context of fund we have discussed. So let me give you one example to make it more clear. Suppose there is a retired CEO. Take the case of retired CEO of a particular company, right? He has 5 crore worth of asset and 20 year of management experience, so he can act like an angel investor. Similarly, a company with 15 crore net worth can also invest. So I hope the definition is crystal clear. Now the option number B says that individual willing to invest less than 25 lakh. This is completely wrong, right? SEBI rule is that minimum investment is 25 lakh, not less than that, right? This is the minimum investment, 25 lakh, not less than that. Option number C says that only venture capital fund with asset over 10 crore. No, angel investors are known for funding early stage startup. Remember, they fund early stage startup, right? And it is not limited to venture capital fund. Even individual, even corporate, they can also qualify. Not only venture capital fund. So this is also wrong. What about D? Any individual investor with net worth of 50 lakh. This is again wrong. Net worth is not 50 lakh, rather it is 2 crore, right? Plus, just having money is not enough. The person must have relevant experience like a startup investing, entrepreneur, senior management, etc. Right. So let's quickly summarize the key point which we have covered in this particular through this question. I told you we are talking to the context of angel investor. So remember, to the context of angel investor, as per the SEBI has defined angel investor as follow. SEBI definition. So individual with asset more than 2 crore, excluding house, he should have an experience in startup, multiple business, senior management role. Right. Just now I given you one example of CEO, of retired CEO. Now minimum investment is 25 lakh. This is a very important thing. How much is the minimum investment for this angel investor? 25 lakh. Okay. And second point, that if it is a corporate, if it is a buddy corporate, then net worth should be more than 10 crore. And AIF and VCF registered with SEBI, they can also be the angel investor. The purpose is to encourage early stage startup funding while ensuring that investors are financially strong and experienced. So friends, remember, angel investors are not rich people with a spare money. They are experienced individual. They are institution with financial strength. Right? I hope this concept is crystal clear now. Let's see the next question that we have. Friends, do hit the like button if you really think that it is adding value to your preparation. Now, the question is as per, I think this question is repeated. Let me skip this particular one. This one is a repeated one. Okay. Now, which of the following is not a common symptom of a sick industrial unit? Very good question. This question is asked every time. Sick start. But question pattern only change, but you should know what is the meaning of sick industrial unit. So not a common symptom is being asked. Right. Options are in front of your screen. As you can see, persistent shortage of cash to meet day-to-day obligation. Option B. Continuous increase in sale and profit over the year. Option C. Decline in capacity utilization and frequent breakdown in the plant machinery. Option D. Delay or default in payment of a statutory due such as taxes and salary. So let's start with option A. It says that persistent short of cash. This is definitely a symptom of sickness. Suppose let me illustrate it here. Right, let me illustrate this particular point here. Very important from examination point of view. Suppose there is a company, okay, and this company is always short of cash. This company, it is always short of cash, and it cannot even pay for daily expense like electricity. It is unable to pay for electricity, right, or raw material, or wages, right. It shows that business is in financial trouble. So imagine a factory that has to borrow money every week just to pay worker. That is clearly a red flag, isn't it? So this is the point. So persistent shortage of cash to meet day-to-day obligation. Yes, this one is condition. So option A is correct. Option number B says that continuous increase in sales and profit over the year. Yes, this is not a symptom. See, if the sales and profit are continuously increasing, the unit is actually healthy and growing. So this is not a sick one. So option number B is the correct answer to this particular question. Option C. Decline in the capacity utilization and frequent breakdown in the plant and machinery. Yes, clearly this is a symptom. What is the meaning of this term capacity utilization? Let me explain. It means how much of the factory full capacity is being used. Every factory has a particular capacity. So how much of that capacity is being used, that's called capacity utilization. So if the plant can produce 100 units, suppose there is a plant that can produce 100 units, but it's only producing 40 or 50. So because of frequent breakdown or inefficiency, so it's clearly a bad signal. For example, take the case of textile mill with machine always out of order and worker sitting idle. This clearly shows the sickness. Option D says that delays or default in payment of a statutory due such as tax and salary. Another symptom of sickness. Yes, this is also another symptom. Healthy unit pays salary, provident fund, taxes on time. If payment are delayed again and again, it means the company is struggling with the finance. Right. So what we have discussed here, we have discussed some symptoms of sickness. Option B is the correct one. Remember, these are the symptoms of sickness: persistent shortage of working capital, decline in capacity utilization, and delay or non-payment of a statutory due, continuous losses, deteriorating financial ratio, irregularities in accounting. So these are the symptoms of sickness. Okay, so friends, remember, a sick unit shows sign of financial weakness like cash shortage, declining production, default, and if sales and profit are rising steadily, that is actually a sign of health. Now friends, let's look at this particular question. Very good question. It asks you which country is credited with the first implementing the concept of industrial cluster as an economic development strategy. Options are United States, India, United Kingdom, and Italy. Very good question it is. Which country started the concept of industrial cluster? So now many of you think of the United States because of the Silicon Valley. Yes, Silicon Valley is the world famous technology cluster where thousands of IT companies, startup, research institutions are concentrated in one place. But remember, Silicon Valley developed later in the 20th century, right? The concept of cluster existed even before that. So while US is a successful example, it is not the first country to implement it. What about India? India is also industrial cluster. Like you might have heard of Surat. Surat is very famous for diamond, right? You might have heard for Tirupur. Have you heard the name of Tirupur? So Tirupur is famous for textile, right? Moradabad. Moradabad. You might have heard of Moradabad. So Moradabad is famous for what? It is famous for brass work, right? So friends, but India started this cluster development program much later, inspired by the international model like Italy. So India is not the pioneer. What about United Kingdom? Now the UK is called the birthplace of the Industrial Revolution. This is called the birthplace of the industrial
skill and institutions. Option number C. Its primary mandate is restricted to developing curricula for primary school to ensure grassroots employment. And option number D. It acts like a regulatory body that enforces compliance and rigid corporate structure for SME and startup in Gujarat. Very good question. Let's have a look at the first What the question is testing? The question is testing you. What is the role of EDII? Right. That is the Entrepreneurship Development Institute of India. Right. What is their role? That is what the question is testing. Right. And it is strategic approach to the entrepreneurship development and how it is linked with the entrepreneurship theory. So the focus is not just on facts, rather how EDI build a sustainable ecosystem. That is what the focus is on. First of all, let's understand what EDII is. But remember one important thing, that EDII is not a bank. It is not a bank. Rather, so it does not give loan. So not a bank, so no loan. Right. EDII is basically training, research and institutional building body. So it is training, it is research and it is institutional building body. So if you look at the option number A says that EDII focus exclusively on for financing entrepreneur through direct loan. Is it correct? No, this is wrong. Actually, EDII does not provide direct loan. Founding institution are bank and financial institution, but EDII itself conduct training, provide mentoring, support capacity building. It never provide loan. What about option B? Yes, it is saying that multidimensional approach using EDP, incubation center and global knowledge dissemination. Exactly. This is the perfectly correct. Why? Because it run EDP. You know what is EDP? So question may be asked, what is the program called EDP run by EDII? That's called, Entrepreneurship Development Program. Entrepreneurship Development Program. It also operate incubation center like Cradle. Right. And it work in 100+ country. It support first generation entrepreneur. It support MSME. It support social entrepreneurship. Yes, B is correct. So this aligns with the resource-based entrepreneurship theory. So sustainable entrepreneurship come from building a skill, knowledge, institution and capability, not just money. What about option C? So it is incorrect. It says that EDII role is limited to primary school curriculum development. No. EDII scope is much wider. There is a wider scope. It work with youth. It work with MSME. It work with trainer. Right. It work with policymaker. Here option C is wrong. What about D? D says that EDII is a regulatory body. No. It is development and promotional, not regulatory. It focus on flexibility, support, skill development. It does not enforce any law or compliance. So option B is the correct answer. So trick to remember is like this. You can remember it like this. EDII is equal to T plus I plus K. T means training, like EDP. EDP is a form of training. I means incubation. So for incubation, one problem scenario would signify a failure to meet the specific financial deepening and inclusion mandate as recommended by the PM task force. So the question revolves around the PM task force. So option they have given that bank achieved a 22% year-on-year growth in total credit to the MSE sector, but only 55% of those advances were directed toward micro-side enterprise. Option B says that bank increases total credit to micro enterprise by 25% year-on-year, but only saw 8% increase in the total number of unique micro enterprise account. Option C says that bank meet its 7.5% PSL sub target for micro enterprise, but failed to establish a specialized MSE branch. D says that bank redirected its PSL shortfall into a dedicated fund managed by SIDBI to ensure the capital eventually reach the micro segment. So these are the 4 options that they have provided. So this question check whether the bank has fulfilled the inclusion and financial deepening target, which is recommended by the PM task force on MSME and adopted by RBI. Let's have a look. So basically, the task force says that bank must ensure 2 things every day. The first thing is increasing total credit. Total credit to be increased to MSE. Total credit increased to MSE by 20%. Right. Second thing, increasing number of micro enterprise account. Right. Increasing number of micro enterprise account by 10%. Think of it like this. Whenever I say this credit growth, so credit growth means what? Credit growth means giving more loan amount. 2 words here you will see. The first word is the credit growth. Credit growth simply means, you are giving more loan. Right. That is called credit growth. And financial deepening. Second point is, deepening. So when I say financial deepening, it means giving loan to more number of borrower. That is how financial deepening will happen. So credit growth means more loan and financial deepening means more number of borrower. So now let's see what they have given in the option. Option number A says that bank achieve a 22% year-on-year growth. Yes, but only 55% of. So if you look at the option number A, Yes, this is a failure. This is a clear case of, failure, right? But this relate to the credit allocation. Option number A, it relate to what? It relate to credit allocation. It is not about financial deepening, right? So this question is specifically about, financial deepening. Two things are there, right? First thing is the financial deepening. Second thing is the credit growth. Yes, credit growth is made by option number A, but not financial deepening. If you look at the option number B, what does it say? So option number B says that, that a bank increased its total credit to micro enterprise by 25% year on year, but only saw 8% increase in total number of unique micro enterprise account. So you can think of this like this. I told you now, credit growth. What is the meaning of the term credit growth? Credit growth means you are giving more loan amount. It means more loan amount, right? And when I say deepening, financial deepening specifically, so it means, giving loan to more number of borrower. Giving loan to more number of borrower. So here what happened, in the option number B, bank increase loan amount to micro enterprise by 25% year on year. This is a good. Target was 20%. How much was the target? Target was at 20% as per the task force. Task force says that bank ensure two things every year, that they have to increase the total credit to MSE. Credit to MSE has to increase by 20%. Target was 20%, and here they have increased by 25%. So credit growth target has been met. And the second thing that this task force tell, that increase the number of micro enterprise account. So they have to increase the number of micro enterprise account by 10%. Now let's see whether they have done or not. So in the second case, the number of micro enterprise account increased by only 8%. The target was 10%. So the bank failed here. This means bank give more money, but to the same old customer, instead of including more new micro enterprise. So option number B is the correct one. What are the question? That which option would signify a failure to meet the criteria? Yes, option number B is the correct one. Let's see the option number C. Option number C says, bank meet its 7.5% PSL sub target for MSE, but failed to establish a specialized MSE branch. See, this question about a specialized MSE branch. A specialized MSE branch are recommended, but the key measurable inclusion metric is what? The key measurable inclusion matrix is 10% growth in account. That has to be done. Missing a branch is not the main financial deepening failure. What about option D? Putting PSL shortfall into a dedicated fund managed by SIDBI. So actually it is not a failure. It is a procedure to ensure money still reaches MSME. So failure is option number B. That is the failure. So how to remember it? So there is a memory trick that I can give you to remember this concept. Just remember this 20-10 rule, right? So what does it mean? So 20-10 rule state that 20% money, it goes to 10% people. 20% money, 10% people. So by what I mean? So 20% means 20% growth, right, in loan amount per year. That is 20%. Significance of 20%. And 10% means 10% growth in number of account, right? That's the significance of 20-10. So remember, money grow by 20%, people cover grow by 10%. So remember, we have just talked about financial action Prime Minister Task Force, which says financial deepening mission. Let me tell you about certificate course on MSME. If you are looking for a one single solution for your entire MSME subject, you can check out our certification course. In this course, you get a folder for unit-wise theory and MCQ. There are 97 files, previous year questions 6 files, quick revision PDF 4 file. Inside the unit-wise theory and MCQ PDF, we have arranged the entire content into F5, 6 modules are there, A, B, C, D, E, F. Inside each module, you get unit-wise content like unit 1, unit 2, unit 3. Inside it, unit-wise content, you will get separate theory PDF, separate MCQ PDF. All these things are downloadable. In addition to that, we provide you previous year question. In the folder of previous year, you will be able to see what type of question have appeared in the recent examination starting from February 2025 and with proper explanation. In addition to that, we provide you quick revision PDF for last minute revision. So all these things you can get at very nominal fee in the description section of the video. You can. Now friends, let's come back to our question. The next question that we have is the SL Kapoor committee, right? So basically the SL Kapoor committee advocated that they recommended one major shift for small businesses, that is called protection to promotion. So which of the following regulatory action best exemplify the committee theoretical framework for enhancing the global competitiveness of the SSC, that small scale enterprise? Option number A, mandating that 20% of the bank total credit be reserved exclusively for manufacturing of item listed under the reserved categories for SSI. Option number B, implementing a reconstruction fund at the state level to ensure that even non-viable sick unit are shielded from market exit. Option number C, transitioning from mandatory physical inspection to a self-certification regime to dismantle the inspector Raj. Option number D, restricting the definition of sector to SSI to ensure that service-related business do not dilute the credit available to the traditional manufacturing. So now let me explain what this SL Kapoor committee was all about. See, this recommended one major shift for the business, that they say that you have to stop the overprotecting. You have to stop the overprotecting, right? And start promoting them. So don't overprotect the small scale industry, start promoting them. Why? Because too many rules, too many inspection, too many restriction were stopping a small industry from becoming the globally competitive. So that was the main idea. Now let's come back to the question. Let's see option number A. It says that, you have to reserve the 20% credit, 20% credit to be reserved, credit for reserved category, right? For SSI. What do you think? Actually, if you reserve this is called, protectionism. This is called protectionism, right? This is the exact opposite of what the committee suggested. Committee push for what? Global competitiveness, right? Committee push for global competitiveness. It is not push for protectionism, right? So Kapoor committee wanted phasing out of reservation, not adding new one. So option A is incorrect. What about B? B says, restructuring fund for all the SIC unit, right? So for all SIC unit. Actually, the committee says that, only potential viable unit should be revived. So the key word is only potential viable unit should be revived. Not here non-viable unit survive is so if you are supporting the non-viable unit survival, obviously it is a kind of protectionism. So this particular committee clearly phase out that. So option number B is also wrong. Option number C, if you look at, so option number C says that, let me highlight it. It says that shifting from mandatory physical inspection to self-certification, right? That is what option number C say. Yes, let me explain. So if you look at the option number C, what does it say? That, that this directly remove the biggest burden on the small industry. That is called, Inspector Raj, right? So what is the inspector? What is the meaning of Inspector Raj? It means too many inspectors are there, right? Too many visits are happening, right? Too many harassments, large count of harassment are there, high compliance time, high cost. So if you allow self-certification, right, the government basically tell the entrepreneur that we trust you, save your time, save your money, focus on production and global competitiveness. Focus on two things, focus on production and competitiveness, right? So this is exactly the promotion mindset, and the promotion mindset was recommended by the Kapoor committee. Please remember, this is called, promotion mindset, and this was recommended by the Kapoor committee, right? So if you look at the option number C, yes, option number C is the best example for the committee theoretical framework. What about option number D? D says restrict definition only to SSI. It says that restricting the definition to SSI and exclude services, right? So it is wrong again, because committee recommended changing SSI to SSE, right? Committee what is recommended? That SSI name should be changed to SSE. What is SSE? That is called a small scale enterprise, right? To include services. So why was they recommended this change? So that, services could be included, right? Because, services were becoming globally competitive, right? Earlier there was only goods. Now to include services, they suggested that, instead of industry, you replace this word industry with enterprise. So remember, what we learned, the correct answer is option number C. So the memory trick is that, so there are 3 P's of Kapoor. Please remember, 3 P's of Kapoor committee. So what are the 3 P's? Please remember it like this. The first P is that protection. There should be no protection, right? Second thing is promotion. Yes, you need to promote them. Third thing is paperwork reduction, right? Obviously, because of this committee report, paperwork has been reduced. That's called self-certification. So if you see an option reducing inspection, bureaucracy or reservation, that is promotion, and that is correct. So Kapoor committee said that stop protecting, start promoting. Global competitiveness need less regulation, less inspection, lower cost. They supported self-certification to remove the Inspector Raj. And there was a shift from SSI to SSE, right? So that is a very important point. And only viable SIC unit should be supported, not non-viable one. I hope till now everything is crystal clear. Now let's shift our focus to the next question that we have. Very good question based on JDD. So this question is about the ZED. But you know what is ZED scheme? Zero defect, zero effect scheme, right? And how a micro enterprise can climb up from bronze level to the diamond level certification. Let's have a look. See, basically this question revolves around the micro enterprise, which is specializing in precision component. They aim to transition from bronze to diamond level certification under the ZED scheme to integrate into the global aerospace value chain. So basically you have to tell me, based on the theoretical framework provided, which shift in operational strategy is most critical for achieving this advancement. So option they have given that moving from self-declaration model to acquiring basic ISO 9001 and BIS product certification to ensure standard conformity. Option number B, implementing sustainable development practices by adopting EcoMark and ISO 15001 to focus primarily on zero effect pillar of the scheme. Option C, shifting from basic quality assurance to the rigorous application of the lean manufacturing tool like BSM, Kanban, and total productive maintenance. Option number D, establishing an in-house skill center and design capability to transition directly into world-class zero defect planning. So let's understand the basic. So this question is all about, ZED scheme. That's called, zero defect, zero effect. So let's understand the basic. First of all, the keyword they have mentioned is the bronze. You know what is a bronze? So bronze means, basic self-check, right? Silver. What is the meaning of silver? Silver means basic standards like ISO, like BIS. Then we have the gold. Gold means, sustainability scheme. And then we have the diamond. Diamond means, lean manufacturing tool. Lean manufacturing tool. And after that, after diamond, what we have? After diamond, we have the platinum, right? Platinum. In the platinum, it means, world-class design, right? It means world-class design and innovation. Now the enterprise want to jump from, bronze to diamond. As you can see, they want to jump from, earlier they are in the bronze. They want to jump from bronze to diamond level, which is a big jump. So diamond level is all about, I told you, diamond level is all about lean manufacturing, right? Like, so can you give me some example of lean manufacturing? You might have heard the name of 5S technique. You might have heard of VSM. That's called, value stream mapping. Kanban, right? Kanban technique. Then TPM, total productive maintenance. So, what are the uses of these tools? These are the tools which are used inside the, lean manufacturing practices. So these are the tools. They help reduce the waste. So waste get reduced, delays get reduced, defect get reduced, and process flow get improved. This is exactly what global aerospace company demand. So if you look at the option number A says that ISO 9001 and BIS product. Actually, this is needed for silver level. If it had to transition to silver level, then it was required, right? But not enough for aerospace grade excellence. What about B? It says about EcoMarks and ISO 15001. So again, it belongs to the gold level, right? Where the focus is on energy efficiency and the environment. At gold level, our main focus is the energy efficiency as well as the environment. So B is not the correct answer. Option number C says that, yes, C I think is correct, right? C is the correct answer because it says that, from basic quality assurance to the lean manufacturing with some tools have been given. Yes. What about option D? D says, skill center and design capability to do world-class zero defect. So that's called, platinum level. So remember, the basic thing is that you can just, I'm giving you a memory trick to remember it, right? So there is a memory trick you can use to remember this thing. Basic standard give diamond performance. Remember this line. Basic standard give diamond performance. So basic means bronze. Standard means silver. Green, G for green. Green or sustainability, right? That is gold. Diamond performance like lean tool. So lean tool means what? Diamond. And then, performance, platinum per innovation, right? So bronze, basic self-check. Silver, ISO, BSI standard. Then gold, sustainability and energy. Let me show you. Remember this very, very important line, right? And diamond is a lean manufacturing tool. Now question number 3 on your screen. So basically this, to understand this question is all about, incipient sickness to sickness. So according to the life cycle of the industrial sickness and symptom outlined by MSME regulatory framework, which of the following scenario describe a unit that transition from incipient sickness to sickness? So option they have given, basically a textile unit experiencing a 20% drop in the capacity utilization due to sudden shift in consumer preference, leading to inventory pile up in the warehouse. B says a precision engineering firm that has reported deteriorating current ratio for 2 quarters and has began delaying the payment of a staff provident fund. C, manufacturing plant that has consistently overdrawn its cash credit limit and has failed to service its interest obligation for a period exceeding 90 days. D, a family-run MSME where high employee turnover and management conflict have led to frequent plant breakdown due to poor maintenance schedule. So 2 words are there. The first word is the, let me highlight it, incipient sickness. Second word is sickness. So whenever I say this word, let me just write it. Incipient sickness. This is called, early trouble stage. So this is when the business is not showing sign of weakness but has not yet defaulted. Sorry, business is showing the sign of weakness but has not defaulted yet. So for some example, suppose your current ratio is decreasing, right? Suppose your inventory is piling up. Suppose your capacity is useless. Then comes sickness. Sickness means what? Formal stage. So a unit becomes sick when it failed to meet the financial obligation. So suppose there is a financial obligation and the unit failed to meet it, then it becomes sick. So the key regulatory trigger is failure to repay the principal. Suppose it failed to repay the principal or failure to repay the interest for more than 90 days. So beyond the 90 days, they can't become what? Beyond the 90 days, they can't become NPA. So this is the official moment the enterprise is treated like a sick. Now let's look at the option. Option number A says that 20% drop in capacity utilization plus inventory piling up. See, these are the operational symptoms. If you look at them in detail, so these are the operational symptoms, right? These indicate incipient sickness but not the full sickness. And the question is about transition from incipient to sickness. So option A is incorrect. B says, bad current ratios. You can see deteriorating current ratios they have mentioned. And the second thing they have mentioned is, 90-day default limit. These are the classic early warning signal. The unit is struggling but has not crossed the 90-day default limit, right? So still in incipient stage. What about option C? Option C suggests that, the unit is overdrawing cash credit limit, drawing more than what is the limit, and also it has failed to service its interest obligation. Yes, this exactly fit the regulatory definition of a sick unit, right? So option C is the correct answer. What about D? D says, that high turnover. Let me highlight it. It says, high turnover, high employee turnover. Then we have conflict, management conflict is there, plus frequent plant breakdown. So these are the managerial or HR symptom, right? You can call them managerial or HR symptom. They can cause sickness, but by themselves they do not indicate the unit has become sick. So remember the rule: if a due remain unpaid for 90 days, the problem is stick. Suppose the due is there and it remain unpaid for how much? 90 days, right? So enterprise becomes sick. So 90-day NPA sick unit. Please remember it. Now we have the next question. Very good question it is. Yes. So what does it say? In 2016, the transition from original TUFS framework to the amended TUFX marked a significant shift in the government fiscal strategy. So you have to tell me, you have to look at the basic theoretical objective, key feature provided. Which of the following base describe the strategic intent moving to both the timely access and transaction cost economics. Let's understand these two quickly. So what is this timely access? So RBI, for MSME loan, what RBI guidelines say? That once the loan is sanctioned, once you sanction the loan, it must be disbursed. It must be disbursed within 30 days. That is what RBI say for MSME loan. After sanctioning, you have to disburse within 30 days. Why? Because if disbursement is delayed, the enterprise loses order. Obviously, enterprise will lose the order, right? And enterprise will face the penalties. And obviously, they will miss the opportunity, especially in the case of export. And the second guideline about the TCE. What is TCE? Transaction cost economics. It says that cost will increase when process is slow. Cost will increase when enforcement is delayed. Enforcement is delayed. Cost will increase when one party behave inefficiently, right? And the beneficiary faces uncertainty after the agreement. So once the deal or the loan sanction is done, the process should move smoothly, right? So if suppose disbursement takes time, opportunity cost in rises, monitoring cost rises, enforcement cost rises, efficiency collapse. Now let's look at the option. Option number A says that asking for document after 15 days. They have mentioned after 15 days. Yes, irritating and inefficient, but not a specific violation of the sanction and disbursement timeline. So not enough to qualify under TCE as an enforcement failure. So A is wrong. What about option number B? It says rejecting on 45th day. 45th day rejected. Actually, this violate the 30-day decision deadline, but the question demand a case that violate both the timely access as well as the TCE. So rejection does not involve enforcement cost in the same way as post-sanction delay. So option C fit better. Let's look at option number C. It says sanction loan in 25 days, but take an additional 40 days to disburse the fund into enterprise account. Yes, this is the clear violation. So you can see total delay in disbursement is 40 days. Acceptable limit is how much? 30 days. Right. Clear violation of the RBI time bond rule. And since the bank delay after sanctioning the loan, the enforcement failure raises the transaction cost. So it perfectly matches. So C is the clear violation. What about D? D says that limiting working capital to 15% of the turnover. This is linked to the information asymmetry, not to timeline or TCE. So so how you can remember these two things? So remember, as for sanction, as for stopwatch. So timely access, remember 30 days. After sanctioning, within 30 days, they have to disburse. Right. And then if there is delay after agreement, if suppose there is a delay after what? After agreement, then it causes enforcement cost. Obviously, enforcement cost will be there and it will cause the bad economics. So RBI say disbursement must happen within 30 days after sanction. Delay disbursement, violation of timely access. This is the very important point to remember. Now, have a look at the next question. So friends, this question is about, DPG. DPG is called, deferred payment guarantee, right? So MSME utilizes the DPG to acquire specialized machinery under unit utilizes a DPG to acquire specialized machinery under the TUFS scheme. So from the perspective of the bank balance sheet and credit substitution principle, which of the following statement most accurately describe the status of this transaction? Option number A, the bank record the full value of the machinery as an asset immediately upon delivery of the good to the MSME. Option number B, bank treat the transaction as a contingent liability because it does not involve an immediate cash outflow. Option number C, the DPG act like a fund-based credit line because the bank pay the supplier the full amount upfront. And option number D, the credit substitution principle implies that the supplier retain the risk of MSME default while the bank act only as payment facilitator or immediate. So first of all, this question revolves around the DPG. Let's understand the basic concept behind the DPG. That's called, deferred payment guarantee, right? So remember, it is a non-fund based. Remember, it is a non-fund based credit facility. What does that mean? So that means, bank does not give money to the MSME upfront. See, since it is a non-fund based, so bank do not give money to MSME, no money, right? Rather, the bank gives a guarantee. What bank give? Bank give a guarantee, right? The bank say if the MSME fail to pay installment, the bank will pay you. So the bank is not paying immediately, but it's checking on the liability. So basically, option number A says that you can show the machinery as a loan asset, but actually, this happened only in the case of term loan. This happened in the case of term loan, while the bank actually give money where you show the machinery as an asset. But what happened in the case of DPG? No money is disbursed, right? There is no disbursement, right? So only a guarantee is given, right? Only a guarantee is given. So no loan asset is created at this stage. Option number A is wrong. What about option number B says the bank treat this transaction as a contingent liability? Exactly. Yes, B is the correct one. Because no cash goes out now, but there is a possible future obligation. Yes, future obligation is there also. If MSME default, the bank must pay. So the contingent liability become real. This contingent liability become real if MSME default. Right. What about option C? the DPG, treating DPG as a fund based facility. No, that's wrong, right? Because fund based means bank give money, money leave the bank account, bank create a loan asset, right? So that is the meaning of fund based. Fund based means bank give money, money leave the bank account. So DPG is exactly opposite of that. No cash outflow, only a guarantee. It is not a non-fund based. And option number D, supplier keep the risk. Here we have seen they have mentioned that supplier retain the risk. Actually, you know what happened in the case of DPG? This is exactly opposite of what DPG does. The supplier transfer the buyer risk onto the bank. So supplier transfer the MSME risk to the bank. This is called, you know, credit substitution, right? Supplier no longer worry about MSME default. Supplier trust the bank guarantee. Bank become responsible if MSME fail. So the correct answer is B. So you can remember it like this. There is a mnemonic you can use. D means don't pay now. D means don't pay now. P means possible future liability. Possible future liability. And G means what? G means guarantee replaces the borrower risk. Guarantee replaces the borrower risk, right? So whenever you see no money given now, bank to ATUFS, which of the following statement accurately reflect the capital investment subsidy structure for an individual entity? So with respect to this ATUFS, you have to tell me that there are 4 statements which I have provided, and you have to tell that which one is the correct reflect the capital subsidy investment subsidy structure. So option they have given, a uniform 10% subsidy is provided across all the textile segment to ensure parity in technological growth. B says that garmenting and technical textile segment are eligible for 15% subsidy capped at 30 crore, while weaving and processing segment receive a 10% subsidy. C says the scheme provide interest reimbursement on term loan specifically for spinning sector to reduce raw material cost. D says entities can claim a one-time 50% capital subsidy on the installation of a second-hand imported machinery to promote rapid industrialization. So these are the 4 options that they have provided, and this question is with respect to the ATUFS, amended technology upgradation funded scheme. So first of all, let me explain what this scheme is all about. So please understand that this ATUFS, right, this is a government scheme under the Ministry of Textile, right, that give financial support to the textile unit. It give financial support to the textile units, right, when they buy new modern machinery. So this textile unit, when they buy new and, you know, modern machinery, right, so they receive, you know, financial support, but the support is not the same for every segment, right? It is not the same for every segment, you know. Basically the scheme give more subsidy. The scheme give more subsidy to the sector that create more values, more subsidies to the sector that create more values and more job. So under ATUFS, you know, there's something called garmenting and, you know, technical textile. Garmenting and technical textile. So basically these are high value and high employment generating sector. High value and high employment generating sector. They get 15% capital investment subsidy. 15% capital investment subsidy. Who get? Garmenting and textile unit get. Technical textile. With a maximum limit of how much? 30 crore. 30 crore is the maximum limit. Then other segment like weaving, processing, jute. Second case we have is the weaving, processing, you know, jute, silk, handloom. So they get 10% CIS, capital investment subsidy, and this is capped at 20 crore. So if you look at the option number A says that uniform 10% subsidy for all the textile segment. No, that's wrong. Right, but ATUFS is not uniform, right? It prioritizes certain segment with higher incentive. Just now, it does not provide equal across all the textile segment. That's wrong. A is wrong. What about option B? So option B, yes, I think it is correct. Yes, it tells that garmenting and textile segment are eligible for 15% subsidy and capped at 30 crore exactly. Another segment like weaving and processing receive a 10% subsidy, 10% CIS, or we call it capital investment subsidy, capped at 20 crore. Exactly, B is correct. What about C? C says that the scheme provide interest reimbursement on term loan. See, it talks about interest reimbursement for spinning, but you know this interest subsidy on spinning, this was the part of the older TUFS scheme. This is not the part of the ATUFS. ATUS only focus on what? ATUS only focus on CIS. That is the main focus of ATUS. The full form I already told you. That is, you know, amended technology upgraded. So if the question was regarding TUFS, then the option C would have been correct. But this question is pertains to ATUFS, amended. So in the amended, it only focus on CIS. It does not focus on, you know, spinning sectors. So option number C is wrong. What about D? D says that, you know, entities can claim 1 times 50% capital subsidy on the installation of second-hand imported machinery. This says that you get a subsidy of second-hand imported machinery. But remember, ATUFS clearly says that only brand new. Again, I am repeating. This is the very important thing. Only brand new and benchmark machine, right? They are eligible. So option D is also not correct. So what we learn from this discussion is that, so there is a memory trick I can provide you so that you can remember the limits. So what is the memory trick? You just remember it. 1530 for garments, 1530 for garments, 1020 for others, right? So what does it mean? 1530, it simply means, you know, garmenting plus textile, technical textile, right? 15% CIS and 30 crore cap, that's called 1513. And then on the other hand, for weaving plus processing, plus other, in that case we have 10% CIS, or we call it 20 crore cap. Fine. So just remember this thing, higher value, higher subsidy. You can see now 30, 30, 15, 30 and 10, 20. So higher the value, higher the subsidy, right? So in this case, 30 crore cap, right? So 15% CIS, 20 crore cap, 10% CIS. So what we learn from this discussion is that, you know, ATUFS support the modernization through capital investment subsidy scheme. For garmenting and technical textile, 15% subsidy and maximum cap is 30 crore. And for weaving and processing segment, 10% subsidy and cap is 20 crore. Only brand new machinery is eligible and scheme is credit linked. You must take a term loan, then only you get this subsidy, and it run on the ITUFS portal. So you must also note it down where it run on the ITUFS portal, right? And the aim is, you know, zero defect, zero effect. This is the aim. Zero defect, zero effect. The same thing has been mentioned here also. So as you can see, this kind of PDF will help you revise the entire content in very short amount of time. And such kind of 10 to 11 PDF I have created since the February 2025 examination. So you can check out our description of the course. In our course, you get such kind of PDF for which help you go through the important questions and help you revise the important content. So zero defect, zero effect means high quality, low environmental impact, conducted through the ITUFS portal for transparency. And yes, it is a credit link subsidies. Coming to our next question, let me introduce you to our certificate course on MSME. So the question and answer session that you are seeing right now is a part and parcel of this our course. You can see I have already added 8 previous year question file starting from the March 2025, and this PDF will also be added. So this will help you. This entire PDF will help you to see the important parts from where question have appeared in the recent examination. Not only that, you get unit wise theory and MCQ PDF as per the module syllabus prescribed by IABF. So it has been categorized into 6 modules. Inside each module you get different types of units. Inside each unit folder you get theory PDF and MCQs PDF. All these PDFs are downloadable. You can access it on the mobile as well as on the PC, and you can go through the entire MCQs. There are almost 1000 plus MCQs in the entire course. In addition to that, for quick revision session, I have added quick revision PDF which help you revise module wise important content in very short span of time. So to get access to this course, you can check out the link in the description section, or you can WhatsApp me on the number. So friends, question number 2 of today's session, let's have a look. So this question is about, what is the import of why is the import of Saudi yarn or mutilated rag from Italy to Ludhiana important for circular economy? And what is the key regulatory requirement for importing it into India? Exactly same question was asked. In the context of global textile value chain, why is the import of Saudi yarn or mutilated rag from European hub like Italy to Ludhiana considered a critical component of the circular economy? And what is the primary regulatory requirement? So 4 options I have provided. Option number A, it allows for the direct resale of premium Italian designer wear in Indian retail market, requiring a luxury good import license. B says it facilitates the recycling of post-consumer textile waste into affordable woolen product, requires that the import wool be mutilated. Option C, it focuses on the extraction of raw silk fiber from the Italian synthetic blend, requiring a phytosanitary certificate for all the synthetic polymer. Option D, it is primarily used for the production of high tenacity industrial filter, requiring a technical textile grade certification from the Italian Ministry of Commerce. Very good question. So why is this import is important for the circular economy? So let's understand the entire concept with a simple story. So Italy, right? You know Italy especially a region in Italy called Prato, right? So this is famous worldwide for recycling the old cloth, right? This is famous worldwide for old cloth recycling, right? And textile waste, old cloth recycling, and textile waste. So these old garments are collected, sorted, cleaned, and converted into loose fiber. So what happened? These old garments, first of all, they are collected. Not only they are collected, they are also sorted, selected, sorted, and cleaned, and finally they are converted into loose fiber. So this fiber is called, this loose fiber is what we call, Saudi wool. Saudi wool. And in India, especially Ludhiana, right? India in Ludhiana, they import such Saudi wool. They import it. Why? Because Ludhiana is a major hub for making affordable woolen product. Ludhiana is a major hub for making affordable woolen product, like blankets, right, sweaters, right, low cost blazers, and warm cloth for the masses. So the whole cycle is a perfect example of a kind of economy that we call the circular economy. This is the perfect example of circular economy. So what happened? It means that instead of throwing textile waste into landfill, it is recycled. Yes, that is called circular economy. So we did not throw the waste to the land. We recycle it. It is further shipped, and then it is reused, and then it is turned into new product, right? And then it is sold at an affordable rate. So what about the regulatory? So the one part we have answered right now. What about the regulatory rule? Yes, see, India has a very strict, so the regulatory conditions say that these rags or these garments, they must be mutilated. They must be mutilated. Mutilated means physically cut, physically torn, and physically damaged. That's called mutilated. Why? To make sure that nobody illegally resell wearable foreign cloth in India without paying high import duty. So when the cloth are already torn, they cannot be worn. So they can only be used as a raw material for pulling the fiber. So if you look at the option they have provided, if you look at the option number 8, it says that it allows for the direct resale of premium Italian designer wear in Indian retail market, requires a luxury good import license. No premium luxury cloth, right, are being imported. This is a textile waste which is being imported, not Italian branded garment. What about option B? It facilitates the recycling of post-consumer textile waste into affordable woolen product. Exactly. It required that imported wool or rag be mutilated. Correct. B is the correct one. What about option C? It says that it focuses on extraction of raw silk fiber from Italian synthetic blend. It required phytosanitary certificate. See, when I talk about this Saudi, just we have discussed that this Saudi has nothing to do with the silk extraction. It has nothing to do with the silk extraction or synthetic fiber. It has nothing to do with these things, right? It is mainly recycled wool or cotton waste. So C is also wrong. What about option D? It is primarily used for production of high tenacity industrial filter. So Saudi is not used for industrial filter. It is used for woolen clothing. Please understand this Saudi. It is used for what? It is used for woolen cloth, and no such Italian technical textile certificate is required. So D is also wrong, right? So what is the correct answer? B. So the memory trick, let me tell you the memory trick. In every question I tell you the memory trick so that you can remember it for the lifelong. So you can remember it like this: cut, then recycle, cut, then recycle, and then spin. So when I say this cut means what? Mutilated rags. Cut means, mutilated rags. This is required by Indian custom, right? Mutilated rag. Recycle means what? Recycle means Italian plateau. Italian plateau, right? So old cloth become fiber. So cut mutilated rag is required by Indian custom, and that is sent to the Italian custom. And this recycling is done by the Italian plateau, and a spin is done in the Ludhiana. Fiber become cheap woolen, right? Cheap woolen. So remember, if it is not cut, it cannot come in. If it is cut, it become yarn. So some keyword which we have discussed is the circular economy. So waste become resource. Italy plateau send recycled fiber to Ludhiana. Ludhiana is a global hub for this soddy yarn and affordable woolen, right? So I hope option concept is crystal clear. Now the next question we have is a very good question, very conceptual question. Let's have a look. So as per the RBI, Reserve Bank of India guideline on the resolution framework, it's all about the resolution framework. So as per this RBI guideline on resolution framework, which of the following best describe the eligibility? And the question is, which of the following best describe the eligibility and classification impact of restructuring an asset? Option A loan can only be restructured only once it has reached the loss asset stage to maximize recovery for the bank. Restructuring is most effective when the asset is standard or substandard. However, a standard asset will typically downgraded to substandard upon restructuring. Option C, doubtful assets are ineligible for restructuring and must be immediately written off from the bank book. Option D, restructuring a substandard asset automatically upgrades its status to a standard as soon as the new repayment agreement is signed. So very good question. Let's break it down very clearly. So what is the meaning of restructuring? First of all, let's clear that. Right. So basically, restructuring means the bank changes the repayment term. Right. Restructuring means what bank is doing? Bank is changing the repayment term. Right. Maybe more time they are giving. Maybe they are reducing the EMI. Or maybe, changing interest rate. Interest rate may change. Fine. So because, borrower is facing temporary financial difficulty. Right. So that is called restructuring. So now the important part is that, RBI law restructuring for the loan that are standard, that are substandard, and that are, doubtful. So RBI law restructuring for all these kinds of loan. But restructuring work best. When the loan is still standard or just recently slip into substandard. Why? The key rule is that suppose if a standard asset, or we can say a good loan is restructured. Suppose a standard asset is restructured, right? What happened? It normally get downgraded. To what? It normally get downgraded to substandard, right? That is the point. So if a standard asset is restructured, it get downgraded to substandard asset, right? So why does RBI do this? Yes, you may ask me question, sir, why do RBI do this? Because, to ensure bank don't misuse restructuring to hide NPA, right? So basically the rule is that if standard asset is restructured, it will get normally downgraded to substandard asset. And so why RBI do it? So because to ensure that bank don't misuse restructuring to hide NPA. So bank may misuse restructuring to hide NPA. Bank should not do that. So the downgrade forces the bank to make higher provision and to stay cautious. So this kind of so that's why downgrading, right? So downgrading, it forces the bank to make higher provision. So once the standard account slip to substandard, now they have to make higher provision, as you know it very well. So downgrading the account means higher provision has to be made and stay cautious, right? So that's why this downgrading is done. Otherwise, what bank will do? Bank will restructure the loan to hide the NPA, right? So what are the options that they have provided? So if you look at the option number A, it says that loan can only be restructured once it has reached the loss asset. No, that's wrong. Loss asset has nothing to do with that, right? Restructuring is not done for loss asset. A loss asset is basically worthless, right? So no recovery is expected for the loss asset. So so restructuring make no sense to the case of loss asset. So option number A is wrong. What about option number B? B says that it is most effective when the standard is when the asset is standard or substandard. Yes, correct. B is the correct one. Right. What about C? C says doubtful asset are ineligible for restructuring. So doubtful asset can be restructured. They have high provisioning requirement, but RBI has not banned restructuring for them. It says that doubtful asset are ineligible for restructuring. That's the wrong word, because doubtful asset can be restructured. What D says? D says that restructuring a substandard asset does not upgrade it to standard. Yes, it must first perform satisfactorily for at least 1 year. So it must, that particular account is checked, is monitored for 1 year continuously. If it performs satisfactorily, right, in that case, it becomes standard again. It becomes standard account again. So the memory trick, let me tell you a memory trick here, that structured, it means a standard down. So whenever you structure, it means a standard down. So whenever you restructure a standard loan, it goes down to 1 grade to substandard, right? So what happened, because of restructuring, just remember, restructuring, risk is increased, and when risk is increased, that's why downgrading is done. Fine. So what we learned, that restructuring means change in the repayment term to help a stressed borrower. And what are the eligible state for restructuring? It can be done at substandard, standard, and doubtful, but best done early. And substandard stays substandard after restructuring, upgrade only after 1 year of good performance, and loss asset are not candidate for restructuring. That's the point we have discussed so far, and this is a very good conceptual question regarding the restructuring, and same was asked in the previous examination. So this is the condition that we must keep in the mind. If the asset side is standard, criteria no overdue or overdue less than 90 days, restructuring potential is high, prevent NPA but cause a downgrade. If substandard means NPA less than to 12 months, so moderate, restructuring potential is moderate, focus on rehabilitation. Doubtful, restructuring potential is low, and loss has no restructuring potential. So as you can see, as you move from a standard to the loss asset, restructuring potential is decreasing time by time. Now question number 5 of today's session, and rehabilitation. Which of the following scenario correctly categorize the cause of industrial sickness into internal and external factor? Option they have provided. Internal means sudden change in government import and export policy. External means frequent breakdown due to obsolete machine. Option B says internal means poor financial management and diversion of fund. External means global recession leading to collapse in product demand. C says internal means shortage of raw material due to a nationwide strike. And external means ineffective marketing strategy and weak distribution network. And D says internal means increase in excise duty by Ministry of Finance. And external means dispute between the board of director and promoter. Very good question. So basically, let's understand it in the simplest way possible. So industry can become sick. Yes, that is what the question is all about. It's talking about the cause of the industrial sickness, right? So it very well that industry can become sick. Fine. So means that they fail to operate profitably. So what is the meaning of this sickness? Sickness means they are no longer profitable. Non-profitable. Right. So they can become sick for 2 reasons. The first reason is called internal. The first reason is internal cause. So this happen inside the company and under the management control. So these reasons are under the management control. Like suppose someone has taken the bad decision. So decision they have not taken correctly. Or suppose planning is very weak. Planning is weak. Or suppose money mismanagement. Suppose money mismanagement happen. Or suppose marketing is very poor. Marketing is poor. Or obsolete machinery. So all these are internal causes. And then also in addition to the internal cause, we also have some external cause, right? So what are external cause? So this happen outside the company, and this is not under the control of management. Like suppose we have the global recession. Yes, this global recession can be an example. Or suppose government policy change. Suppose there is a change in policy. Or natural disaster. Fine, inflation is there, a strike is there. So these are the external causes: recession, policy change, disaster, inflation. So now let's look at the option that they have provided. Option number A says that internal. This talk about government policy change is external. See, when I say this sudden change in the government policy, import export policy, this is not an internal. This is an external point, right? And obsolete machinery, this is internal, right? Not an external. So this option A is wrong. What about C? It says that shortage of raw material due to nationwide strike as internal. No. Nationwide strike is an external factor, and ineffective marketing strategy in internal factor. So C is also wrong. What about D? It says that increase in excise duty by the Ministry of Finance. So this is an external. So Ministry of Finance has increased the excise duty. This is an external cause. And dispute between board of directors. This is an internal cause. So D is also wrong. So what is the correct answer? Yes, B is the correct answer. And this is what we are looking for. So if you look at the option number B, it says that poor financial management and diversion of fund. Yes, these two accounts toward the internal. And global recession, it is an external cause. This comes from the world economy. So option B correctly matches internal versus external factor. So B is the correct answer to this question. So there is a memory trick. You can use it to remember. What is the memory trick? Let me explain. The memory trick is, inside, which means mistakes, and outside, it means market. Please understand. So inside the company, management mistake, internal. Outside the company, market policy, external. Right, that's the point. So internal causes like management control, like poor planning, diversion of fund, overstaffing, technical operational problem, weak marketing, bad project appraisal. And external cause, I told you, beyond company control. Fine. So please remember it, very, very important aspect. Now let's see the next question that we have. So this particular table, correctly differentiate between the internal cause and external cause. Look, like internal, poor project appraisal, technical deficiency, overstaffing, diversion of fund, lack of quality control. So yes, they are controllable. They require management change. While external factors include power shortage, change in technology, infrastructure, they are uncontrollable. Now let's have a look at the next question. Next question that we have. So what it is all about, a manufacturing unit is there. They are facing a persistent power supply shortage due to a statewide grid failure and raw material shortage caused by unexpected traditional international trade embargo. So in the context of industrial sickness, how are these factors classified and what is the primary? So I think this thing we have discussed already. So let me skip this particular question. Internal, external classification already we have done. Now let's switch our focus to the next question regarding the credit appraisal. Very good question. So they are asking you in the case of credit appraisal, a significantly high asset turnover ratio compared to industry average most likely indicate which are the following scenario. So this question pertains to high asset turnover ratio. What does it indicate? So that's what the question is asking. Option they have provided, that company has a massive amount of idle cash and non-productive fixed asset. Option number B says that the company is over trading, means that it is generating. So it says that company is over trading. It means it is generating high sale volume with a very thin asset base, potentially leading to liquidity crunch. C says that company has a very poor sale performance and is unable to utilize its inventory effectively. And D says that company is under trading, suggesting that the management is conservative and carry excessive safety stocks. So what do you think? So high asset turnover ratio indicate which kind of which option? That's the question. So friends, let's understand this in the simple word. What this asset turnover ratio is all about. So it tells us how efficiently a company uses its asset. How efficiently the company uses its asset to generate sale. So efficiency. This efficiency is what asset turnover ratio tells you. What is the formula? The formula for asset turnover ratio is net sale, which is our output, divided by average total asset. Net set average total asset means how efficiently company is using its asset to generate the sale. That is what asset turnover ratio is all about. Now this ratio is much higher than the industry average. What does it mean? Let me explain. So suppose our asset turnover ratio is much higher than the average of industry. So it means that company is generating very high sale using very few asset. So it simply means high sale using few asset. High sale is being generated using few asset, right? So at first this may sound amazing, but when the ratio become too high, it usually signal over trading. At first company is getting high sale using few asset. That is what it means. At first so you can remember it like this. Too high, it means too thin. Too high means too thin. So what I mean to say, if the asset turnover ratio become too high, the company is running too thin. The company is running too thin on what? Too thin on asset, right? So remember, thin base plus high sell, thin base plus high sell, there is a risk of over trading, right? Thin base plus high sell, and there is a risk of over trading. Or shorter, we can also write it shorter, that high turnover, high risk, right? Two. So DER can be written like this: total long-term debt, upon total net worth. Total long-term debt upon total net worth, that's called TNW. Now let's compute each part step by step. How to compute the total tangible net worth? Sorry, in the numerator we have total long-term debt upon tangible net worth, not total net worth. Actually, it is tangible net worth. Now the main part is to computation of this tangible net worth. So how to compute this?
Have already received subsidy under other government scheme. Option D says that PMEG offer a flat 10% subsidy for project costing below 5 lakh regardless of the location or category. So these are the 4 options given here. Let's start with the option number 1. So let's look at option number 1. Option number 1 is correct. Yes, this one is correct. Why? Because PMEGP was created by combining 2 schemes, right? So there was first scheme was called PMRY. Okay, this PMRY was merged with, this is called Prime Minister Rozgar Yojana. It was merged with REGP, which we call Rural Employment Generation Program. And then after merging, this PMEGP is evolved. Okay, the idea is simple: to help the people. What was the idea? To help the people, right? And they start their own small business and micro enterprise, right? So this is the point. And who implemented? KVIC implemented, which is the Khadi and Village Industry Commission, with support from, so they get support from state office, right? They also get support from banks. Now eligibility, I told you should be above 18 years of age, minimum 18 years, right? With 18 years of age, and should have minimum education required. So for example, suppose there is a 20, let me give you one example. Suppose there is a 20-year-old student, right? 20-year-old student with basic schooling. Now he want to open a tailoring unit, right? He want to open a tailoring unit, or he want to open a small service business, so they can apply under PMEGP. So these are the keyword point you must keep in the mind. Let's look at option number B. Option number B says that it provides only loan with no subsidy. That is wrong. PMEGP is not about agriculture. It's right. It's totally no. This is wrong. It is not about agriculture. It's about non-farm micro enterprise. Let me write it down. Right. It's about non-farm micro enterprise. Non-farm micro enterprise. Right. Like a small shop, workshop, or service unit. And it provides both loan and subsidy. Subsidy can range from 15% to 35%. Depending on the location and category of the beneficiary. So this option number B is completely misleading. What about C? Option C says that PMEGP allow financial assistance to existing enterprise that have already received subsidy under the other government scheme. So this is again wrong. Why? Because existing enterprise that already got subsidy from other government scheme, they are not eligible. PMEGP is only for, remember, it is only for new project. See, I'm writing these things are very, very important. Remember, this is only for new project. Okay, for example, if someone already took a subsidy under Mudra Yojana, they cannot come again and claim under PMEGP for the same unit, right? What about option D? Option D says that it offers a flat 10% subsidy for project costing below 5 lakh regardless of location or category. So this is also wrong. Subsidy is not flat 10%. It changes depending on whether the person is from general category or from a special category like SC, ST, women, differential level. So subsidy can range from 15% to 35%. Right, so let's take the quick summary of what we have discussed here. So this is all about PMEGP. So it is a merger of 2 schemes, PMRY and REGP. First point. Second point is that focus is to create self-employment. That is the focus. What is the focus? Focus is for creating the self-employment. Then I told you it is implemented by KVIC plus bank. Eligibility is more than equal to 18 years, right? Plus minimum education. Project limit is 25 lakh. This question is also asked. What is the limit? 25 lakh manufacturing and 10 lakh for services. This limit is also been asked. Remember, project limit is 25 lakh for manufacturing and 10 lakh for services, and subsidy range from 15 to 35%. This range depending on the location and category. An existing unit with subsidy not eligible for it. So friend, always remember this point that PMEGP is for new small businesses, right? It is for new small businesses in non-farm area, helping youth an artisan to become self-employed. That is what PMEGP is all about. Everything has been written here and I have summarized all the things. If you think that this content is useful for your preparation, please hit the like button. This will motivate me to make more such as content. Also, you can share the content with your colleague who are preparing for this examination. It will be quite beneficial for them also. For your information, let me tell you that if you want to prepare, if you want to practice some quizzes based on MSME, you can join our Telegram channel. In the description section of the video, you will get the Telegram channel. You can join the Telegram and attempt many quizzes which are completely free of cost. Now friends, let's look at the next question. So what was the primary objective of the Pradhan Mantri Task Force? Yeah, this is a very good question. Pradhan Mantri Task Force constituted for the MSME sector development. What was the primary objective? Option A, to promote export of MSME product through international marketing agency. Option B, to reflect on issues raised by MSME association and formulate a comprehensive agenda for action. Option C, to develop policies solely focused on labor law reform in the MSME sector. Option D, to provide direct financing assistance to MSME without any structural reform. Very good question it is. So let's discuss this particular question. Let's look at option number A. So if you look at option number A, this is too much narrow. Export are important, but the task force was not made just for export. It has a much bigger agenda. The agenda was much bigger. Not only marketing, but also credit, labor, infrastructure, skill development. So export was only one small part, not the full object. Option number B, yes, this one is the correct one. Because the task force was formed after the Prime Minister met with the, see what happened, let me tell you the history also. Basically our Prime Minister, they met with the MSME association, right? They met with the MSME association who highlighted many problems. Problem where that, credit was not available. Marketing channel was weak. Labor law was complicated. And infrastructure better was needed. Infrastructure better was required. Skill development was one reason, right? So even a smoother exit policy for field business. So the task force divided this topic into group, right? What the task force did, these are the topics, right? And they divided this topic into group, okay? And worked on recommendation for each group. They work on recommendation. For example, imagine that there is a small textile unit in a town. It has struggled with the loan approval, faces tough competition in the marketing, and lack a skilled worker. So the task force wanted to fix all these problems together, not just one. That's why they group it and then they work on the recommendation. Now option number C says that to develop policies solely focused on labor law. It is again wrong. Labor law reform was just one part. Yes, this was one part of this. If the task force only focused on labor, it would miss bigger issues like credit and infrastructure. Option D says that to provide direct financing assistance to MSME without any structural reform. This is also incorrect. Why? Because the task force did not give out money directly. Instead, its job was to study the problem. First of all, they would study the problem. After studying the problem, they will recommend the changes. So the correct answer to this question is option number B. So let's quickly summarize the keyword which we have discussed regarding the task force. So task force was created after the PM meet MSME. First point I told you, PM and meet MSME association, then task force was created. The goal was to solve the multiple issue together. It was divided into subgroup, right? This task force was divided into subgroup like credit, marketing, labor, infrastructure, right? Exit policy, skill development, and it was divided into subgroup for focus solution. Recommended setting up PM Council on MSME. So it set up PM Council on MSME, right? It was set up, right, to monitor the progress. So friend, remember the Pradhan Mantri Task Force for MSME was all about 360-degree solution. It was all about 360-degree solution for small businesses, not just one area. I hope this clear your confusion. Now friends, let's look at the next question that we have. The next question that we have is as you can see on the screen. So it says that what is the full form of CGT-MSE and what is its primary objective? Very good question it is. CGT-MSE full form and the primary objective is being asked in this question. So options are credit guarantee trade management service for enterprise to provide marketing support to SME. B, credit guarantee fund trust for micro small enterprise to provide credit guarantee to financial institution for loan extended to MSME. C, credit goods and trade management services for entrepreneur to provide subsidy on trade loan. D, commercial guarantee trust for micro and small entity to finance large scale industry with collateral security. I hope you know the answer very well, right? So the option number A is wrong. First of all, the full form itself is incorrect. CGTMAC does not stand for Trade Management Service. No, this is wrong. Second thing is that it talk about marketing support. See, CGTMAC is not about marketing. It's about, loan guarantee. CGTMAC is about, loan guarantee. Like marketing support is given by other government scheme, but CGTMAC focuses only on finance. Yes, B number is correct. This is the correct definition. Credit Guarantee Fund Trust for Micro and Small Enterprise. Remember the full form. Sometimes question will be asked that what does E stand for? What does T stand for? So you should know the complete full form. And if you talk about the CGTMAC, let me elaborate a little bit about it. So you must know that CGTMAC, it was set up by MSME Ministry plus SIDBI. Remember, SIDBI is also involved in setting up the CGTMAC. What was the purpose? The purpose was to help the small business get loan without collateral. How? So bank normally ask for property or other asset as security. Many small entrepreneurs don't have that, right? Because bank, whenever these small businesses go to bank for loan, bank asks for something as collateral, and normal business don't have that. So CGTMAC give a guarantee to the bank so that even if the borrower fail, the bank is protected. This makes bank more confident in giving the loan. Let me give you one example to make it more clear. For example, let's suppose there is a young entrepreneur and he wanted a 10 lakh rupees loan, right, to start a repair workshop. He wants to start a repair workshop for which he need 10 lakh rupees note. But he has no land, he has no property to mortgage. With CGTMAC, the bank can still give him the loan because the scheme guaranteed. I hope it is clear. Now, let's look at option number C. Credit Goods and Trade Management Scheme, completely wrong. And CGTMAC does not provide subsidy. Here it is just subsidy. No. It has nothing to do with subsidy. It is a kind of credit guarantee. Option number D is also wrong. Right. Large scale industry are not covered here. Remember, large scale industry, they are not covered here. And it is meant for collateral free loan. So the correct option is option number B. So what we learn from this question is that, full form, first of all, full form is clear. Credit Guarantee Fund Trust for Micro and Small Enterprise. Second thing is that who set up? MSME and SIDBI. Both of them combinedly set up. The purpose is to help the MSE, not your large enterprise. The purpose is only to help the MSE, micro and small enterprise, to get loan without collateral or third party guarantee. How it work? It work by giving bank a guarantee cover. And it apply to manufacturing and it apply to the services. Right? Remember it. And it is not about marketing and not about subsidy, not for larger industry. So friends, always remember, CGTMAC is like a safety net for the bank so that a small business can get loan easily without pledging the property. Friends, if you are looking for a study material for this MSME examination, you can WhatsApp me on this particular number because we have almost 5 to 6 previous year memory question based PDF available in the course. Also, we provide you 2000 plus MCQs for practice purpose. Along with that, module wise quick notes, unit wise quick notes, which will immediately help you in your upcoming examination. And many people have qualified the examination using our material in their first attempt itself. If you want also to qualify using, increase your efficiency, having net low input and maximum output, then you can check out the course. The course link is provided in the description section of the video. I hope every aspect about CGTMAC is clear. Now let's see the next question that we have. Yes, very good question. This question asks you the definition of the angel investor. So question is regarding that as per the SEBI Alternative Investment Fund, we call it AIF. As per the SEBI AIF Regulation 2012, which one of the following correctly describe an angel investor? So this question is regarding the angel investor, right? Option number A says that individual with a net tangible asset of at least 2 crore, excluding principal capital residence, or is a senior management professional with at least 10 years of experience, or a buddy corporate with net worth of at least 10 crore. Option number B says that any individual willing to invest less than 25 lakh in a startup without an asset or experience criteria. Option C, only venture capital fund with asset over 10 crore investing in large stage venture. And option D says that individual investor with net worth over 50 lakh irrespective of the investment experience. So if you look at the option number A, we question is asking about angel investor. Yes, option number A is the correct one. This one is the correct one. Right. So remember some criteria. Let me explain. So this is the correct definition. First of all, and if you talk about the angel investor, so you must know that he is an individual. Right. He is an individual. He must have asset worth at least 2 crore, not counting their home. Plus, they should have an experience. They require experience. experience, like they must have invested in a startup before, right? Starting multiple business, they must have experience of starting the multiple business, right? Serial entrepreneur we call it. Or they must be in the senior management role. They must be in the senior management role for at least 10 years. If either of these, then they're called, what is the term that we're talking about here? Angel investor. Okay. Now, third thing is that buddy corporate. Yes. If we talk about the buddy corporate, so that company with, so if for individual, this is the criteria. For buddy corporate, which have at least 10 crore net worth, can also be angel investor. Now let's talk about the funds. Even AIF, alternative investment fund, or VCF, it is called venture capitalist fund, registered with SEBI. They also qualify. So see, individual, in context of individual we have discussed, in context of buddy corporate we have discussed, in context of fund we have discussed. So let me give you one example to make it more clear. Suppose there is a retired CEO. Take the case of retired CEO of a particular company, right? He has 5 crore worth of asset and 20 year of management experience, so he can act like an angel investor. Similarly, a company with 15 crore net worth can also invest. So I hope the definition is crystal clear. Now the option number B says that individual willing to invest less than 25 lakh. This is completely wrong, right? SEBI rule is that minimum investment is 25 lakh, not less than that, right? This is the minimum investment, 25 lakh, not less than that. Option number C says that only venture capital fund with asset over 10 crore. No, angel investors are known for funding early stage startup. Remember, they fund early stage startup, right? And it is not limited to venture capital fund. Even individual, even corporate, they can also qualify. Not only venture capital fund. So this is also wrong. What about D? Any individual investor with net worth of 50 lakh. This is again wrong. Net worth is not 50 lakh, rather it is 2 crore, right? Plus just having money is not enough. The person must have relevant experience like a startup investing, entrepreneur, senior management, etc. Right. So let's quickly summarize the key point which we have covered in this particular through this question. I told you we are talking to the context of angel investor. So remember, to the context of angel investor, as per the SEBI has defined angel investor as follow. SEBI definition. So individual with asset more than 2 crore, excluding house, he should have an experience in startup, multiple business, senior management role. Right. Just now I given you one example of CEO, have retired CEO. Now minimum investment is 25 lakh. This is a very important thing. How much is the minimum investment for this angel investor? 25 lakh. Okay. And second point, that if it is a corporate, if it is a buddy corporate, then net worth should be more than 10 crore. And AIF and VCF registered with SEBI, they can also be the angel investor. The purpose is to encourage early stage startup funding while ensuring that investors are financially strong and experienced. So friends, remember, angel investors are not rich people with a spare money. They are experienced individual. They are institution with financial strength. Right? I hope this concept is crystal clear now. Let's see the next question that we have. Friends, do hit the like button if you really think that it is adding value to your preparation. Now, the question is as per, I think this question is repeated. Let me skip this particular one. This one is a repeated one. Okay. Now, which of the following is not a common symptom of a sick industrial unit? Very good question. This question is asked every time. Sick chart. But question pattern only change, but you should know what is the meaning of sick industrial unit. So not a common symptom is being asked. Right. Options are in front of your screen. As you can see, persistent shortage of cash to meet day-to-day obligation. Option B, continuous increase in sale and profit over the year. Option C, decline in capacity utilization and frequent breakdown in the plant machinery. Option D, delay or default in payment of a statutory due such as taxes and salary. So let's start with option A. It says that persistent short of cash. This is definitely a symptom of sickness. Suppose let me illustrate it here. Right, let me illustrate this particular point here. Very, very important from examination point of view. Suppose there is a company, okay, and this company is always short of cash. This company, it is always short of cash, and it cannot even pay for daily expense like electricity. It is unable to pay for electricity, right, or raw material, or wages, right. It shows that business is in financial trouble. So imagine a factory that has to borrow money every week just to pay worker. That is clearly a red flag, isn't it? So this is the point. So persistent shortage of cash to meet day-to-day obligation. Yes, this one is condition. So option A is correct. Option number B says that continuous increase in sales and profit over the year. Yes, this is not a symptom. See, if the sales and profit are continuously increasing, the unit is actually healthy and growing. So this is not a sick one. So option number B is the correct answer to this particular question. Option C, decline in the capacity utilization and frequent breakdown in the plant and machinery. Yes, clearly this is a symptom. You know what is the meaning of this term capacity utilization? Let me explain. It means how much of the factory full capacity is being used. Every factory has a particular capacity. So how much of that capacity is being used, that's called capacity utilization. So if the plant can produce 100 units, suppose there is a plant that can produce 100 units, but it's only producing 40 or 50. So because of frequent breakdown or inefficiency, so it's clearly a bad signal. For example, take the case of textile mill with machine always out of order and worker sitting idle. This clearly shows the sickness. Option D says that delays or default in payment of a statutory due such as tax and salary. Another symptom of sickness. Yes, this is also another symptom. Healthy unit pays salary, provident fund, taxes on time. If payments are delayed again and again, it means the company is struggling with the finance. Right. So what we have discussed here, we have discussed some symptoms of sickness. Option B is the correct one. Remember, these are the symptoms of sickness: persistent shortage of working capital, decline in capacity utilization, and delay or non-payment of a statutory due, continuous losses, deteriorating financial ratio, irregularities in accounting. So these are the symptoms of sickness. Okay, so friends, remember, a sick unit shows sign of financial weakness like cash shortage, declining production, default, and if sales and profit are rising steadily, that is actually a sign of health. Now friends, let's look at this particular question. Very good question. It asks you which country is credited with the first implementing the concept of industrial cluster as an economic development strategy. Options are United States, India, United Kingdom, and Italy. Very good question it is. Which country started the concept of industrial cluster? So now many of you think of the United States because of the Silicon Valley. Yes, Silicon Valley is the world famous technology cluster where thousands of IT company, startup, research institutions are concentrated in one place. But remember, Silicon Valley developed later in the 20th century, right? The concept of cluster existed even before that. So while US is a successful example, it is not the first country to implement it. What about India? India is also industrial cluster. Like you might have heard of Surat. Surat is very famous for diamond, right? You might have heard for Tirupur. Have you heard the name of Tirupur? So Tirupur is famous for textile. Right, Moradabad. Moradabad, you might have heard of Moradabad. So Moradabad is famous for what? It is famous for brass work. Right. So friends, but India started this cluster development program much later, inspired by the international model like Italy. So India is not the pioneer. What about United Kingdom? Now the UK is called the birthplace of the Industrial Revolution. This is called the birthplace of the Industrial Revolution. Many industry grew here, but they were not formally organized as an industrial cluster. See, what we are talking about, we are talking about the cluster, industrial cluster. We are talking about this. So basically, they were not formally organized as industrial cluster with a development strategy. So while the UK was an early industry hub, it was not the first country to implement the cluster mechanism. The correct answer to this question is Italy. Yes, Italy is the correct one. Italy after World War II, the northern region of the Italy like Emilia and Tuscany become famous for a small and medium industry grouped together. For example, one district is specialized in textile, another district in ceramic, another in machinery. So this concentration of similar industry in one region created a strong network, and business could share supplier, skilled worker, knowledge. This was the real beginning of the modern cluster strategy. Later thinkers like Michael Porter, they studied this Italian cluster and made the concept famous worldwide. So the correct answer is Italy. Italy is credited with being the first to implement industrial cluster as a development strategy. Please remember this question are most frequently asked. The next question is a very good question. Let's understand. What was the key reason why the Jaipur MSME cluster did not perform as expected? Yes, Jaipur MSME cluster. Option A, lack of skilled labor and increase in production cost. Option B, a strong competition from international market. Option C, over investment on infrastructure without market demand. Option D, excessive government incentive causing dependency. So let's look at option number A. Yes, this is the correct answer. In Jaipur, many MSME struggled because they did not have enough skilled worker. This is the main point, lack of skilled worker. right? For example, if you are making handicraft or jewelry, you need a skilled artisan who know the craft well. But here, the shortage of such a skilled worker labor affected the quality as well as the efficiency. At the same time, production cost keep going up, like raw material, electricity, wages. The double problem: low skill and high cost, reduced competitiveness. In fact, many units were working with just 50% of their capacity. What about B? A strong competition from international market? Yes, international competition does affect many MSME, but in Jaipur case, the main problem was not a global competition. The bigger issue was inside the cluster itself. Lack of skilled worker, high cost. So option B is not the primary reason. Yes, it was a reason, not the primary one. What about C? Over investment in infrastructure. So what's the meaning of this term over investment? It means building more than what is required. But Jaipur problem was not too much infrastructure. In fact, cluster has issues like poor marketing support, lack of design innovation, right? So this option does not fit the real cause. What about D? Excessive government incentive causing dependency. Sometimes too many subsidies can make industry dependent. But here Jaipur MSME were not suffering because of too much incentive. Instead, they were struggling due to skill shortage, weak design development, rising cost, etc. So let me summarize the keyword. Right, the main reason Jaipur cluster underperformed was the skilled worker, lack of skilled worker, right, plus production cost was rising, right. So these are the two reasons. So friends, remember the Jaipur MSME cluster teaches us that even with demand, if you don't have a skilled manpower and cost efficiency, performance will suffer. I hope this breakdown make things easy to understand. Now friends, let's look at the next question. Very good question, again related to the cluster. So you can see now back to back 3 questions on cluster. So you can see the importance of cluster development. Very important cluster development program. The question is, which of the following correctly describe the typical phases involved in cluster development? Option A, identification, initiation, establishment, operationalization, transformation. Option B, planning, marketing, executing, closure, post evaluation. Option C, formation, production, marketing, distribution, termination. Option D, idea generation, innovation, product launch, growth, decline. So this one is a typical question. Very good question it is. So friends, let's go through each and every option. We'll start with option number A. Yes, option number A is the correct one. Right. First thing is the identification. Right. The very first step in cluster development, we're talking about CDP. That means cluster development is called identification. Now let me clear your theory portion. What is the meaning of this term identification? Do you know its meaning? Let me write it down. Identification. Find the potential cluster. We find the potential cluster. How do we find it? By mapping the industries. We map the industry and find the potential cluster that share similar product, similar process, similar market. Let me give you one example. Like identifying a particular region where many small textile unit exist. Many small textile unit exist. Right, that is called identification. After identification, we have initiation. Initiation means what? Formulate a strategy, engage a stakeholder, create a shared vision for the cluster. That is called initiation. Like organizing meeting. Suppose you are organizing meeting with a local entrepreneur. Right, you are organizing meeting with a local entrepreneur. Why so? So as to agree on a common goal. After initiation, then come establishment. Set up governance structure, common facility, begin development planning like training, technology upgradation, infrastructure. So in this case, we create a common facility. What we do? We create a common facility center for dyeing and finishing in the textile cluster. After establishing come, operationalization. Which means, making the cluster functional with active participation, marketing, skill building and innovative support. Like launching cluster wide branding. One example you can think of launching cluster wide branding. Okay, this is called operationalization. Then comes transformation. What is the meaning of transformation? Focus on long term sustainability, scaling up, continuous innovation, networking beyond the local region. So that's why from this discussion what we come to know that yes, option A is the correct one. Option B is wrong. Why it is wrong? Because cluster development is a long term strategic process. Right, not just a one-time process with closure. It is a long-term strategic process. Option number C is also incorrect. This look more like a product life cycle or business operation model. Cluster are building ecosystem, collaboration, growth. They do not terminate like a product. And option number D also look like product life cycle. You can look at it. Right. Again cluster development is much broader. So friends, remember there are 5 phases of cluster development. First of all, identify, then initiate. Means identify means you find the potential cluster. Initiate means you build a strategy, you build shared vision. Establish means you set up a structure, set up common facility, set up a start development. Operationalization means functional cluster with active participation. And transformation means long-term sustainability, scaling, innovation, and networking. So remember, cluster development is like nurturing a community of business step by step, from identifying the potential to sustaining the growth. I hope you find this explanation easy to understand. Do hit the like button. Now friends, let's see the next question that we have. The next question is on your screen. Which of the following is not a scheme or program offered by SIDBI for MSME? Option A, SMILE, SIDBI Make in India or Soft Loan Fund for Micro and Small Industry. Option B, SIDBI Assistant and Aid for Thematic Support to MSME. In short, we call it SAT. Option C, PM Swanidhi Scheme for Street Vendor. Option D, SIDBI Speed Plus Scheme for Financing Purchase of Machinery. If you look at the option number A, yes, it is correct. This SMILE scheme provides soft loan. What is the meaning of this soft loan? For new or early stage manufacturing. And it offers you flexible terms, make it easier for a startup to access fund. Like for example, a new small textile unit want to start production, but they don't have enough capital. So SMILE provide a soft loan to help them. Then we have SAT. Yes, this is another correct SIDBI scheme. SAT focus on SC/ST entrepreneur. It's all about SC/ST entrepreneur. It provides term loan and favorable terms and credit guarantee to help promote inclusivity in MSME. So for example, suppose there is an SC owned handicraft business, they can get financial support to expand operation or upgradation. PM Swanidhi scheme is the incorrect one. This is the government program for street vendor, right? It is launched by the MOHUA, Ministry of House and Urban Affairs. So SIDBI, it provide working capital loan to a street vendor. SIDBI may sometime act like a facilitator. Remember, this particular SIDBI, it may act like a facilitator, right? But the scheme is not directly offered by SIDBI, right? What about option D, Speed Plus? Yes, SIDBI Speed Plus scheme is the correct one. Speed Plus help MSME purchase machinery, right? Through this scheme, they can purchase machinery from the OEM. OEM is what? Original equipment manufacturer. Please understand, sometimes next time the question will be asked regarding the Speed Plus scheme. You must know, Speed Plus scheme help the MSME to purchase machinery. It help the MSME to purchase machinery from OEM. It offers streamlined documentation and competitive interest rate. So the correct answer is option number C. Please remember, SMILE is a soft loan for early stage MSME. SAT is a support to STSC enterprise, and Speed Plus is a machinery finance
exceeding 10 crore. This is incorrect. This is actually the definition of a small enterprise. This is actually the definition of a small enterprise, because micro enterprise have much lower limit, right? If we talk about their investment, so their investment is less than 1 crore, and their turnover less than 5 crore, right? So this is incorrect. Option B says a small enterprise have an investment in plant and machinery not exceeding 1 crore. So this is also wrong. This is actually definition of micro enterprise, right? So for micro enterprise, investment is less than 1 crore. If you talk about the small enterprise, right, if you talk about the small enterprise, you must know that for a small enterprise, investment range is less than 10 crore and more than 1 crore, and turnover is less than how much? 50 crore, right, and more than 5 crore. So option C says that a micro enterprise 1 crore 5 crore. Yes, correct, very nice. And a small enterprise 10-50. Yes, this is also correct. So absolutely correct. This is exact definition as per the government revised MSME classification. And option D is also wrong, not exceeding 20 crore and 100 crore. This is wrong, right? So this is the condition for medium enterprise, right? For medium enterprise, 20 crore investment and turnover is 100 crore, right? So what we learned from this question, that micro enterprise 1 crore investment, 5 crore turnover, a small enterprise 10 crore investment, 50 crore turnover. If this investment or turnover crosses this limit, it fall into a different category which we call as medium enterprise. So this is a very important question which is asked every year. You should know the limits of each and every in terms of investment, in terms of their turnover, right? So the explanation is also provided here. You can see option C is the correct answer. Let's see the next question. What is the rate of guarantee fees charged under the credit guarantee scheme for micro and small enterprise, which is called CGMSE, for loan exceeding 5 lakh to women entrepreneur? Very nice question it is. So credit guarantee scheme for micro and small enterprise, CGMSE. So what is the rate of guarantee fee charged under the CGMSE for loan exceeding 5 lakh to women borrower? Option A say 0.5% per annum. 0.75, 0.85 or 1%. 0.5, this is wrong. Option A is wrong. Option A is wrong because this is too low compared to the actual guarantee fee for loan exceeding 5 lakh. Option B say 0.75. This is also incorrect because while this percentage is close, it is still not the official rate charged under the CGMSE scheme. Option C is absolutely correct, 0.85. Remember it. Under CGMSE, if a woman entrepreneur take a loan of more than 5 lakh, the guarantee fee charged is 0.85% per annum of the limit sanction. Let me give you an example. What does this mean? Let's say मान लीजिए एक वुमेन एंटरप्रेन्योर ने 10 लाख का लोन लिया. Suppose an woman entrepreneur take a loan of 10 lakh under the scheme. So the guarantee fee will be how much? 10 000 multiplied by 0.85%. And what will that be? That will be 8500 rupees per year. 8500 per year, right? So this will be the guarantee fee. So this fee is collected to provide a credit guarantee, meaning if the borrower is unable to repay, the scheme help protect the lender from financial loss. So ये guarantee fee लिया जाता है वुमेन एंटरप्रेन्योर से, right? तो गारंटी फी कितना होगा? 8500 रुपया गारंटी फी होगा 1 साल का, और ये फी कलेक्ट किया जाता है ताकि ये क्रेडिट गारंटी मिले. मतलब कि यदि बॉरोवर अपने रिपेमेंट करने में असक्षम है तो ये स्कीम हेल्प करता है लेंडर को फाइनेंशियल लॉस से बचने के लिए. सो आई होप दिस मेक द कंसेप्ट क्लियर. द आंसर इज 0.85% ऑफ द per annum, right? And 1% is also incorrect, right? So what we learned, CGMSE scheme provide guarantee coverage to bank for loan to micro and small enterprise. For loan above 5 lakh to women entrepreneur, the guarantee fee is 0.85%. And I request you, in your book you will see a table. आप एक टेबल देखेंगे और उस टेबल में सभी का गारंटी फी दे रखा है. Please go through that table, right? Very very important from examination point of view. Now let's see the next question. Which of the following is the primary advantage of cluster based finance for MSME? What is the primary advantage of the cluster based finance for MSME? So before answering this question, let me tell you that if you are interested to, if you are looking for the content of MSME examination, I want to tell you that on our app, that is JIB and CIB Made Simple app, we provide unit wise theory PDF, unit wise MCQs PDF, previous year questions, right? So all these things have helped you to prepare for this examination in a less time and with less effort, because whatever MCQs have been provided, if you go through only them, they are more than sufficient. And if you want to get access to this kind of course which we call certification course in MSME, so you can WhatsApp me on this particular number. Let me write down the number here. So you can WhatsApp me on this particular number, or in the description section you will see the link, right? If the course link has been provided. Now let's come back to this question. Which one of the following is a primary advantage of cluster based finance for MSME? So let's answer this question. Cluster based finance. Option A, increase competition among MSME. Option B, risk mitigation. Option C, higher interest rate on loan. Option D, limited access to market. So what do you think? Let's analyze each and every option. Option A, increase competition among MSME. This is wrong, because cluster based finance does not increase competition in a negative way. Instead, it promotes collaboration. It promotes collaboration. Let me give you an example. मैं एक एग्जाम्पल लेके समझाता हूँ आपको. Imagine a group of small textile business worker working in the same industrial area. So a group of textile worker working in a working in a same business area. Instead of competing, they share resource, they share supplies, they share market information, helping each other grow. So this is incorrect. Competition नहीं बढ़ाता है. Risk mitigation. Yes, this is correct. This is correct. Cluster based financing help reduce risk. How does it mitigate risk? It mitigate risk by bringing MSME together, collaboration. Just now I have told you. For example, if one MSME face financial difficulty, bank are more likely to support them if they are a part of a successful cluster. बैंक देखिए, मान लीजिए कि एक MSME फाइनेंशियल डिफिकल्टी फेस कर रहा है, तो बैंक उसे सपोर्ट करेगी यदि वो एक फाइनेंशियल क्लस्टर के पार्ट हो. Right. So also group knowledge, shared business strategy help reduce financial uncertainties. Right. So that is why option B is the correct one. Option C, higher interest rate on loan. This is wrong, because in reality, cluster based finance often help MSME get better loan terms and sometimes even lower interest rate. समझ में आया? और ऑप्शन डी कह रहा है कि लिमिटेड एक्सेस टू मार्केट. दिस इज ऑल्सो रॉन्ग, बिकॉज दिस अपोजिट इज ट्रू. MSME in cluster often have better market access because they can collectively negotiate with the buyer and supplier. So what we learned from this question, that cluster based finance help MSME. How they help MSME? They help MSME to reduce the risk. You can see the answer. They help MSME to reduce the risk. It promotes collaboration, not competition. It does not lead to higher loan interest, and it enhances the market access. So these are the benefit of the cluster based financing. Now let's see this question. What is the extent of guarantee cover for micro enterprise with a credit limit of above 5 lakh and up to 50 lakh effective from 1st April 2023. So very nice question it is. Some percentage has been given to you, right? So question is what is the extent of guarantee cover for micro enterprise with credit limit from 5 lakh to 50 lakh, right? So option A says 85%, 75%, 80%, 70%. So first option 85% is incorrect. Why it is incorrect? Because you know that the 85% guarantee cover apply only for loan up to 5 lakh. So if you have loan up to 5 lakh, then only this 85% coverage apply, right? This 85% guarantee cover apply for only for loan up to 5 lakh. In the case of micro enterprise, once the loan exceed 5 lakh, the guarantee cover is lower. Now option B says 75%. This is absolutely correct. As per the latest update effective 1st April 2023, the guarantee cover for micro enterprise with loan above 5 lakh and up to 50 lakh, right, up to 50 lakh, in this range 5 to 50 lakh, the guarantee cover is how much? 75%. Let me give you an example to make it more clear. Imagine if a macro business take a loan of 20 lakh. मान लीजिए किसी बिजनेस से 20 लाख का लोन लिया. If a macro business take a loan of 20 lakh, okay, now 75% of this amount what will be? 75% कितना होगा 20 लाख का? 15 लाख. So 15 lakh is covered under the guarantee scheme. Remember, this 15 lakh is covered under the guarantee scheme, right? This 15 lakh is covered under the guarantee scheme, reducing the lender's risk. It obviously reduces the lender risk, right? Whoever is lending, it reduces the risk. So remember, from 5 lakh to 50 lakh, the coverage, the guarantee cover is 75%. And now option number C say 80%. This is also wrong, because you know 80% guarantee cover apply to only MSE located in the north east region. देखिए मैं एक क्वेश्चन से आपको कितना कंसेप्ट क्लियर कर रहा हूँ. मान लीजिए अगला सवाल पूछ दे आपसे कि बताइए कोई नॉर्थ ईस्ट रीजन में है तो उसको कितना गारंटी कवर मिलेगा, तो सही जवाब होगा उसका 80%. ठीक है, तो दिस इज द वे ऑफ लर्निंग. फ्रॉम अ सिंगल क्वेश्चन we can create 4 other question, and there is a high possibility of them asking in the upcoming examination, right? And option number D says 70%. So the guarantee cover for micro enterprise above 5 lakh up to 50 lakh is not 70 but 75%. So what we learned from this question, we have just learned that up to 5 lakh the guarantee cover is, just wait a minute, up to 5 lakh it is 85%, from 5 to 50 lakh it is 75%, and if northeast region, right, MSE northeast region, then up to 50 lakh it is 80%, right? This is remember. And remember, from 50 lakh to 500 lakh, let me also know, you should also know this, in the northeast region we are talking about. In northeast region, from 50 lakh to 500 lakh, right, it is how much? It is 75%, because as the amount increases, guarantee cover decreases. That is the key point. So I hope this make your concept crystal clear. Now let's move to the next one. फ्रेंड्स, आपसे एक रिक्वेस्ट है, आपने यदि MSME का एग्जाम दिया और आपको यदि क्वेश्चन आंसर करना, आप यहाँ पे लिमिट देख सकते हैं. प्लीज गो थ्रू दिस लिमिट, सुपर इंपॉर्टेंट. आप इसका स्क्रीनशॉट भी लेकर रखिए क्योंकि ये सवाल बार बार पूछा जाता है. फ्रेंड्स, इफ यू वांट टू शेयर क्वेश्चन विथ अस, आप हमसे यदि क्वेश्चन शेयर करना चाहते हैं जो एग्जामिनेशन में आया है, तो यू कैन व्हाट्सएप मी ऑन दिस पार्टिकुलर नंबर, एंड आई गारंटी फॉर दोज कैंडिडेट हु विल शेयर क्वेश्चन विथ अस, आई विल प्रोवाइड यू स्पेशल डिस्काउंट ऑन एनी अदर सर्टिफिकेशन एग्जाम कोर्स, बिकॉज यू नो इन आवर ऐप वी हैव सर्टिफिकेशन एग्जाम कोर्स फॉर ऑलमोस्ट ऑल 6 सर्टिफिकेशन. हमारे ऐप में सभी 6 सर्टिफिकेशन कोर्स अवेलेबल है. तो जो भी लोग हमारे साथ क्वेश्चन शेयर करेंगे इस नंबर पे, तो उनको मैं स्पेशल डिस्काउंट प्रोवाइड करूंगा इस पार्टिकुलर कोर्स पे. नाउ लेट्स सी द नेक्स्ट क्वेश्चन. द नेक्स्ट क्वेश्चन दैट वी हैव is you can see that what is the composite loan limit for a small manufacturing enterprise. So very nice question. You know about composite loan scheme, we have talked about it earlier. So option A say 50 lakh. This is wrong, because 50 lakh is a significant loan amount. It is not the upper limit for the composite loan given to SME, right? So this is wrong. Option number B says 75 lakh. This is also wrong, because the limit is higher than 75 lakh. Option C say 1 crore. Yes, it is correct. You know, 1 crore composite loan limit for a small manufacturing enterprise is 1 crore. Now you might wonder, what is this composite loan? Composite loan क्या होता है? देखिए, composite loan के अंदर वर्किंग कैपिटल भी आएगा. मीन्स जैसे वर्किंग कैपिटल आप जानते हो ना, डेली ऑपरेशन के लिए, इट इंक्लूड्स वर्किंग कैपिटल फॉर डेली ऑपरेशन, एंड इट ऑल्सो इंक्लूड्स टर्म लोन, right? It also includes term loan. Term loan is given for what? For buying equipment, for buying machinery. This term loan is provided. So that is why it's called composite, because it contains both the working capital part also and term loan part also. For example, if a small manufacturing unit want to buy new machinery worth 60 lakh, right? And that is term loan, because they want to buy new machinery, and this is the part of their term loan, you know it very well. And also this manufacturing unit need 40 lakh, use 40 lakh for raw material and daily expense, that is working capital. So the total loan needed is how much? 1 crore, right? So which fall within the composite loan limit, you should remember it. And 1.5 crore is wrong. So what we learn from this question, that whenever you see this word composite loan, it means two things: working capital plus term loan, right? So for a small manufacturing enterprise, remember, a small manufacturing enterprise, the limit is 1 crore. So this help MSME invest in equipment, technology and daily operation. So I hope this was clear to you. If it is clear, if you like the video, please hit the like button and do subscribe to our channel for such kind of content. Now let's see the next question. Very nice question. What is CGT MSE fee for loan up to 5 lakh for women and enterprise located in the northeast? Right, so option is say 0.5%, 0.75%, 0.85%, 1%. What do you think is the correct answer? First option, 0.5%. This is wrong. 0.5%, you know that this is not the correct CGTMSE fee for loan up to 5 lakh. The actual rate is higher. Now option number B say 0.75% per annum. This is actually correct. You know what is CGTMSE? First of all, you should know the full form of it. Let me write it down. It stands for Credit Guarantee Fund for MSME, for MSE, micro small enterprise. Credit guarantee fund for micro and small enterprise. You know, it provides financial security to bank when they lend to a small business, right? So whenever bank lend to a small business, so the CGT MSE provide financial security to the bank, right? So you know, for loan up to 5 lakh, the guarantee fee is 0.75%, and for women entrepreneur, it is also for women entrepreneur as well as enterprise located in the northeast region. Let's give you an example. So for example, if a woman entrepreneur take a loan of 5 lakh, suppose a woman entrepreneur take a loan of 5 lakh under CGT MSE, so her guarantee per year will be how much? 5 lakh multiplied by 0.75%, and if you calculate it, you will get 3,750 rupees per year. So the low fee structure encourage bank to lend to women business in the northeast by reducing their risk. Earlier what we talked about, इससे पहले भी क्वेश्चन था, याद है आपको? If you remember it, there was a guarantee fee. There was a guarantee fee, and this is the CGT-MSE fee. So both are different. Guarantee fee was 0.85%, if you remember it, and here we are talking about CGT-MSE fee, right, which is 0.75%. So the lower fee structure encourage bank to lend to women and business in the northeast by reducing their risk. So what we learned from this question, that CGT MSE provide credit guarantee to banks for MSME loan, and for loan up to 5 lakh, women and northeast enterprise 0.75%. For loan above 5 lakh, fee increase to 0.85%. You must remember it. For one more information I am providing you, that up to 5 lakh, if this is the 5 lakh, the CGT MSE fee is 0.75, and more than 5 lakh, CGT MSE fee is 0.85%. So I hope this make the concept clear. That okay. Now let's see the next one. So friends, next question is, what is the bank limit for working capital based on turnover method? Very simple question it is, right? I think you know the answer. So please answer it. Is it 10% of the projected sales turnover? Is it 15%, 20% or 25%? What do you think? So option number A says 10% of the projected sales turnover. This is incorrect. You know, this 10% limit is too low, right? ये बहुत कम है. Right, business need more liquidity to manage their daily operation. 15% is also low, right? Correct answer is 20%. 20% of the projected sales turnover. What does this mean? That means bank calculate working capital limit as 20% of the projected sales turnover. This ensure that business have enough cash flow to manage raw material purchase, salary paying and handling operating expense. Let me give you an example. एक एग्जाम्पल लेके समझते हैं इसे. मान लीजिए एक बिजनेस जो है सेल्स टर्नओवर को प्रोजेक्ट करता है. Suppose a business project sales turnover of rupees 1 crore, right, for the year. So it projects sales turnover of rupees 1 crore. Now bank will provide 20%. What is the 20% of 1 crore? That is 20 lakh. So bank will provide 20 lakh as the working capital limit. So this 20 lakh is the working capital limit, right? So this helps the business run smoothly without cash shortage, right? So option number D, 25%, this is wrong, right? Because you know 25% is higher than the standard percentage. So what we learn from this question? We learn from this question is that turnover method, in this turnover method, bank provide 20% of the projected sales turnover as a working capital. It helps business manage daily expense like salaries, raw material and operation. If projected sale is 1 crore, so working capital limit is 20 lakh. So I hope this make the concept clear, right? Now let's see the next one. The next one is, according to the investment criteria, a service enterprise is classified as a small service enterprise if its investment and equipment is up to how much? Right. Option number A say 50 lakh. What do you think? This is incorrect. 50 lakh is too low to qualify as a small service enterprise. Instead, this amount is closer for the micro service enterprise. You know, service enterprise, if you categorize it, there is one called micro service enterprise, there is one called small service enterprise. So the question is asking you about the small service enterprise, so it is near the micro service enterprise, so this is wrong. What about 1 crore? 1 crore is also wrong. 1 crore is a significant investment, but it is not the correct upper limit for a small service enterprise. 2 crore is the correct answer, right? You know, a small service enterprise is defined as a business in the service sector whose investment in equipment does not exceed 2 crore. मतलब ये हुआ कि सर्विस स्मॉल सर्विस एंटरप्राइज एक ऐसा बिजनेस होता है हमारे जिसका इन्वेस्टमेंट जो है खासकर सर्विस सेक्टर में, क्योंकि क्लियरली लिखा हुआ है सर्विस सेक्टर. So it is a business in a service sector whose investment in equipment does not exceed 2 crore. Right? How? This classification is very important because it helps business avail government benefit like subsidies, lower interest loan, and it differentiate MSME based on the investment capacity. Let me give you an example. मान लीजिए एक business, suppose a business in the IT service sector invest 1.8 crore, right, in the server, in the computer, in the software. Right. So suppose a business in the IT service sector invest 1.8 crore in the server, computer, software. So since the investment is under 2 crore, it qualifies as a small service enterprise and can access MSME benefit. Right. 5 crore is wrong. So what we learned from this question? We learned that a small service enterprise means investment in equipment up to 2 crore. Right. A small service enterprise means investment in equipment up to 2 crore, and micro enterprise have lower limit while medium enterprise have higher limit. So for example, if an IT firm invests 1.5 crore in equipment, it qualifies as a small sector enterprise. I hope this makes the concept clear. Now let's see the next one. For a small manufacturing enterprise with a good track record, collateral security can be waived up to. Very nice question, right? 10 lakh, 15 lakh, 25 lakh, 50 lakh. You know, 10 lakh is wrong. While banks sometimes provide collateral free loan up to 10 lakh, the actual waiver limit for a small manufacturing enterprise is higher. 15 lakh is also wrong. Correct answer is 25 lakh. Option number C is the correct answer. You know why? Because bank can waive collateral security up to 25 lakh for a small manufacturing enterprise that have good credit history. Track record means what? अच्छा credit history हो. Consistently repaid loan on time, and a strong business performance record. For example, imagine a small business manufacturing electronic component, right, that has been running successful for 5 years. So suppose a small business manufacturing electronic component, it has been running successfully for the last 5 years. If they apply for loan up to 20 lakh, right, the bank may approve it without requiring collateral, making it easier to access the credit. 50 lakh is wrong. So what we learned, collateral free loan for a small in manufacturing enterprise up to 25 lakh, right? So no need to place any property or asset for the loan within this limit. It encourages small business to expand without financial stress. So that is why collateral free loan is applicable. Now this is a great question. Let's answer this question. If an MSME unit hold a margin of 20 lakh and its projected sales are 400 lakh, what will be its working capital limit? Options are 40 lakh, 60 lakh, 80 lakh, 100 lakh. First try it yourself. पहले आप खुद से try करें, फिर explanation को सुनें. So the question is how to calculate this WCL. What is the meaning of WCL? Working capital limit. You know, bank use something called turnover method. You know about this? Bank use something called turnover method to calculate it. I think we have talked about it earlier. As per the turnover method, it says that working capital limit is equal to 20% of projected sale. 20% of projected sales. I think we know it, right? Now what is the projected sale here? Projected sales is 400 lakh. So what is the 20% of 400? 20% of 400 is 80 lakh, right? So the margin of 20 lakh, you know, this margin is given 20 lakh. This margin is a part of the business on fund and does not directly affect the working capital limit calculation in this case. So it has no role to play here. So the answer will be option number 3. This is 20 lakh is just given to confuse you, right? So margin has no role to play here because, you know, margin is a borrower contribution. It has nothing to do with the working capital limit. So correct answer is option number C, right? So what we learned, that imagine a manufacturing unit expecting annual sales of 400 lakh. To run smoothly, it needs a working capital loan from a bank. Using the turnover method, the bank allow 80 lakh as a working capital limit, right? So what we learned, turnover method, working capital limit is 20% of the projected sale, and formula is quite simple, and margin does not affect this calculation directly. That is why just given to confuse you, right? Let's see the next question that we have. The next question is on your screen. You can see. Friends, if you want such kind of PDF, you can WhatsApp me on the number provided in the screen, right? We have such kind of previous year almost 3 to 5 sets available, which have been collected memory based. Now question is khadi village industry considered part of micro and small enterprise irrespective of investment in plant and machinery? What do you think? Option A say yes, option B say no, option C say let's discuss. So let's answer this question. Option A say that yes, khadi and village industry are always considered a part of MSE regardless of investment in plant and machinery. This is absolutely correct. You know, KVI, in short we call this khadi village industry as KVI, and this KVI is directly supported by the Ministry of MSME and KVIC. So Ministry of MSME supported and KVIC, which is Khadi Village Industrial Commission supported. Unlike regular MSE, KVI unit are included under the MSE category regardless of their investment in plant and machinery. No matter what they have invested in plant and machinery, they will be included under KVI, MSE. They are included under micro small enterprise category. So you know, a special government scheme you might have heard like PMEGP. What is PMEGP? Prime Minister Employment Guarantee Program. And you might have heard of Spurthi. What is Spurthi? Let me show you. Option A is correct here. Let me show you what is Spurthi. You can see it here. So Spurthi, you can see it stands for, let me tell you the full form of Spurthi. You can see, yeah, a scheme of fund for regeneration. You can see a scheme of fund for regeneration of traditional industry and Prime Minister Employment Generation Program. You know, these schemes, special government schemes are there which provide funding and assistance to this industry. And you know, the government recognized the social and economic importance of KVI in rural employment generation. So they are always considered part of the MSE, no matter whatever they have invested in plant and machinery, right? So there is a Khadi Gramodyog Vikas Yojana. It is an umbrella scheme under two major components: Khadi Vikas Yojana and Gramodyog Vikas Yojana, aimed at development of KVI. You should know this because question may be asked, right? Option B say no, Khadi and village industry are not related to MSE. This is wrong. Option number C say Khadi and village industry are part of MSE only if they are invested in plant machinery below a certain limit. This is also wrong. There is no limit, right? So what we learned from this question, that Khadi and village industry is always part of MSE. No investment limit apply here. It is supported by Ministry of MSME and KVIC through various government scheme, and there are some program which I have just talked now, like PMEGP program, Spurthi program, right? So which help in funding and rural employment. So unlike regular MSME, KVI is included under MSE without checking investment in machinery, right? That is the point. Now what is the primary purpose of DRT? To handle civil dispute, to facilitate the debt recovery process for bank, to adjudicate criminal case involving financial fraud, and to provide legal representation for borrower in the court. So what do you think? The primary purpose of DRT? DRT stands for Debt Recovery Tribunal, right? So option A says that to handle civil dispute unrelated to the financial matter. Is it correct? No, because DRT are not general civil court. They specifically deal with loan recovery case. Option B says that to facilitate the debt recovery process. Yes, it is correct. You know that DRT were established under the RDDBI Act. You know about it. RDDBI Act. That is Recovery of Debt Due to Bank and Financial Institution Act 1993. And their purpose is to speed up the recovery of NPA and help bank recover large outstanding loan. And you know, DRT handle dispute of 20 lakh and above, right? So greater than 20 lakh or equal to 20 lakh and above, they handle the dispute. And appeal against the DRT decision goes to DRAT. You must know this. DRAT stands for Debt Recovery Appellate Tribunal. For example, let's suppose a business takes a loan of 50 lakh from a bank but fails to repay it. He does not repay it. Instead of filing a case in the regular court, which takes year to complete, the bank can approach the Debt Recovery Tribunal for a faster decision. That is the role of DRT. So option B is the correct answer here, right? Let's see the next question. The next question and final question of today's session is, you can see, which organizations serve as the Federation for Small and Medium Industry in the West Bengal? So option A, West Bengal Micro Small Facilitation Council, Federation of Small and Medium Enterprise Unit, West Bengal MSME Development Corporation, and Khadi and Village Industry Commission. Correct answer is FOSMI, that is Federation of Small and Medium Enterprise. right? You should know about it, that this was established, this is the primary organization representing a small and medium enterprise in West Bengal, established in 1952. This focuses on development of a small industry and provide various services. CLCSS, right? Which of the following is covered under the CLCSS for MSME? So let's see the option that we have. The first option say providing. What is CLCSS? Credit Linked Capital Subsidy Scheme. First of all, you should know the full form, right? So option is providing working capital loan to MSME. So what do you think? See, this sound reasonable, right? But it is not correct for CLCSS. The scheme is focused on what? The scheme is focused on technological upgradation, right? This CLCSS scheme is focused on technology upgradation, not general working capital loan. Such loan are usually handled by bank under other scheme like CGT MSE. Now option B says offering 15% subsidy on technology upgradation investment up to rupees 1 crore. Yes, this is the correct answer. CLCSS provide a 15% subsidy to MSME for upgrading their technology, making it their production process more efficient and competitive. You imagine a small manufacturing unit upgrading from manual to automated machinery. So a small manufacturing unit which is upgraded from, earlier it was manual system, and now it has been upgraded from manual to automated machinery, right? So if the investment is rupees 50 lakh, suppose the investment is rupees 50 lakh, so they can get 15% subsidy. 15% subsidy they can obtain, and that is how much? 7.5 lakh saved. 7.5 lakh rupees will be saved. So option B is the correct answer. Now let's see the other option we have. Option C says that again I am repeating this particular concept. This says that I have taken a small manufacturing unit which upgraded from manual to automated machinery, and investment is 50 lakh, so they can get 15% subsidy. I think 15% will not be 7.5 lakh. This will just be 50 lakh. Yes, 7.5 lakh. So they will get 7.5 lakh subsidy, right? So offering us 15% subsidy on technology upgrades and investment up to 1 crore, right? So this is CLCSS. Now option C says granting direct financial aid for MSME expenses. This sound helpful, but it is not a part of CLCSS. This scheme does not provide direct financial aid. It focuses solely on subsidies for technology upgrade. And option D says subsidizing raw material costs for MSME. This is unrelated to the scheme. CLCSS has nothing to do with raw material subsidy. So the right answer is option number B. So the key points which we come to know from this particular question is that CLCSS focus on technology upgradation. First of all, you should know that is focus on technology upgradation, right? And the second point is that it provides 15% subsidy on eligible investment up to rupees 1 crore, and it does not cover working capital loan. What are not covered? Working capital loan are not covered. Then aid, financial aid is not covered, or raw material subsidy are not covered, right? So these three things are not covered under it. Now let's see the next question we have. Let's MCQs. Question number 2, as you can see on composite loan. So the question you can see, which of the following statement regarding composite loan for MSME is not correct, right? So this is the question. So remember, we are looking for incorrect statement here, right? So let's see the first option. A composite loan of rupees up to rupees 1 crore can be sanctioned by bank under a single window. This is absolutely correct, because composite loan allow MSME to get funding for both working capital and fixed capital, right? Like buying, suppose you are buying machinery, that is fixed capital. So composite loan allow MSME to get funding for both working capital as well as fixed capital under a single application to avoid unnecessary paperwork. So let me give you an example. Suppose an MSME apply for 50 lakh. Suppose an MSME apply for 50 lakh rupees to buy machinery, right? And rupees 10 lakh for daily operational expense, So they get both under one loan, right? So a composite loan up to 1 crore can be sanctioned by bank under a single window for a working capital loan as well as a fixed capital loan, right? Suppose MSME apply for 50 lakh to buy machinery and 10 lakh to cover daily operational expense, so they get both under one loan. Now option B says that bank sanctioning a term loan must also sanction a working capital limit to avoid delays in production. Yes, this is also correct, because this ensures that when business invest in long term asset like machinery, they don't face cash flow problem, and they don't face cash flow problem for daily operation like paying for electricity or labor. Option C says that composite loan are provided only for purchasing raw material, not for machinery. This is incorrect statement.
and hence the correct answer to our MCQs. Because these composite loan are not restricted to just raw material. They cover working capital loan also like raw material, and fixed capital loan also like machinery. For example, imagine an MSME buying advanced packaging equipment while also needing fund to buy packing material. So composite loan can cover both. And option D says that, let's see the option number D, just wait a minute. Yeah, the RBI master direction dated July 24 2017 governs the sanctioning of the composite loan. So see, this is correct because RBI guidelines are crucial in regulating composite loan and ensuring MSME get the support they needed. So the correct answer to this particular question is option number C, right? That composite loan are provided only for purchasing raw material, not for machinery. This is incorrect because this is the right choice of this question. So you should know that this composite loan cover both the fixed and working capital. Fixed capital also cover, working capital also cover, and they are sanctioned under a single window. You should know this are sanctioned under a single window. And term loan and working capital loan limits are combined to avoid production delay, and RBI master direction dated to July 24 governs composite loan. I hope this breakdown cleared up your doubt about the composite loan. If you really find it helpful, don't forget to like, share and subscribe for more simple and clear explanation. Now let's see the next question. The next question is regarding when a shareholder, who can be a shareholder in a public limited company, right? PLC means public limited company. Who can be shareholder? So friends, let's see the first option. Only the company executive can be the shareholder. This is incorrect because public limited company are open to anyone who meets the investment requirement. Limiting shareholder to just company executive is not how it works. So for example, if only the CEO, CFO and a few executive could buy share, it would not be called a public company, right? Now the next option says only individual investor. See, this is also incorrect because individual investor can buy share. Public company welcome a wider pool of investor. It welcome a wider pool of investor. Now option C says that only business partner and financial institution. Again, this is incorrect. Why? Because business partner and financial institution can invest, but they are not the only one who can. And option D says individual, business partner and financial institution. This is the correct answer. That a public limited company can issue share to a variety of stakeholder, including individual like you and me, business partner and financial institution like bank. Think of a company like a Reliance Industry. Its shares are bought by individual investor, mutual fund and other business like. So the correct answer is option number D, right? So let's summarize the key point. The key point here is that public limited company are open to multiple type of investor. Shareholders can include individual, business partner and financial institution, and they are not limited to executive or special investor category. I hope this explanation make the concept easy to understand. Now let's see the next question, that is our question number 4 from the previous year asked question. Now this is based on hand holding stage for rehabilitation of MSE. So the question is, which of the following is not a criteria for a MSE account to reach the hand holding stage in the rehabilitation process? Very nice question. So let's answer this particular question. So friends, option A says that the delay in commencement of commercial production by more than 6 months due to reason beyond the promoter's control. So what do you think? This is correct because if an MSME can't start its operation within 6 months, so suppose there is an MSE, it can't start its operation within the 6 months, right? Due to uncontrollable factor like government delay or natural disaster, the account may need support through rehabilitation. Account has to be supported through what? Through rehabilitation, right? So for example, imagine an MSE factory delayed by heavy flood. So suppose heavy flood came and it delayed MSE factory. So this would qualify for hand holding support, right? This will automatically qualify for hand holding support. Now option B says that company incur losses for 2 years or cash loss for 1 year beyond the accepted time frame. This is another valid reason because persistent loss indicate that business is struggling and may require intervention, right? So business is struggling and it may require intervention because the company is struggling, right? So for example, if a small manufacturing unit continues to operate at a loss for 2 consecutive years, so it becomes clear candidate for hand holding, right? So this is also correct. So question is, which is not correct, right? You should remember option C says that sales exceeding 75% of the projected level in terms of the value during a year. This is incorrect statement and hence the correct answer. If the sales exceed 75% of projection, So sales exceed 75% of projection. It shows the business is performing fairly well and does not require rehabilitation. Obviously, sales is larger than the 75% of the projection. So business is performing well. So why there is a need of rehabilitation? In fact, such business are considered as stable and successful. And option D says that capital utilization is less than 50% of the projected level in terms of quantity. This is the valid reason for hand holding, because the capital utilization is low. This is called low capital utilization. This is called low capital utilization. So the low capital utilization signals inefficiency of a poor market demand. If a business that projected 1000 unit per month is only producing 400 unit, it may need hand holding support, isn't it? So if the capital utilization is less than 50% of the projected level, suppose the business projected that projected 1000 unit per month. Business projected 1000 unit per month, but it is only producing 400 unit. So what would that be? It will need hand holding support, right? So the correct answer is option number C, right? So let's summarize the key point just now. So hand holding support is provided when business face delays, losses or underperformance issue, right? Then hand holding support is provided, and key triggers include delayed production, persistence loss or low capital utilization. Sales exceed 75% of the projection means the business is stable and does not need rehabilitation. I hope this makes your concept clearer. Now let's see the next question. The next question is based on CERSAI. Under which act is the CERSAI licensed? Very good question. So let's go through the option. The first option says BRA. This is incorrect, because Banking Regulation Act governs how banks operate in India, including rules related to their management, right? So this is incorrect. Option B says Companies Act 2013. Exactly, this is the correct answer. That CERSAI registered as a company under the Companies Act 2013, and this act governed the formation, regulation, dissolution of a company in India. I am giving example, just like Tata, just like Infosys, right, are registered as company under the act. CERSAI follow the same legal structure. And the last option C says SARFAESI, that is securitization and reconstruction of financial asset and enforcement of security interest. So this is a tricky option, because SARFAESI Act clearly defines the purpose of CERSAI, which is to record charge on secured loan. However, it does not license CERSAI. So suppose if a bank want to secure a loan against property, the details are registered with CERSAI under the SARFAESI provision, but SARFAESI only provide the legal framework, not the licensing. And option D is RBI Act. This is absolutely incorrect, because RBI Act is mainly concerned with the regulation of monetary policy and the functioning of central bank in India. That is why option number B is the correct. So what is the key takeaway from this particular question? The thing is that CERSAI is a central registry that record information on secured loan to prevent fraud, and it is licensed under Companies Act 2013. SARFAESI provides its legal purpose but does not handle its licensing, and Banking Regulation and RBI Act are unrelated to its licensing, right? So the question was regarding the licensing of that. Okay, I hope you are understanding each and everything. Don't forget to hit the like button, right? If you really think that this effort is useful, I will bring more and more MCQ session on like this. Please proper explanation of each and every question, which will provide you conceptual clarity, and if you get such question in examination, you will confidently answer it. Now let's see the next question. The question is regarding the legal status of a business entity. Very good question it is. Let's see, which of the following statement is not correct regarding the legal status of proprietorship and partnership firm. So basically it is regarding the legal status of the sole proprietorship and partnership firm in India. Let's see the option. Option A says a sole proprietorship is not recognized as a separate legal entity from its owner. So what it is saying? It is saying that in a sole proprietorship, the owner and business are the same legal entity. What do you think? Is it clear? Is it so that in a sole proprietorship the owner and business are the same legal entity? There is no legal distinction between the owner personal finance and the business finance. Obviously, for example, if a shopkeeper takes out a loan for his business and can't repay it, his personal asset can be used to settle the debt. So that is why in a sole proprietorship is not recognized as a separate legal entity from its owner. Exactly, this is correct. Now option B says that a partnership firm is recognized as a separate legal entity from its partner. This is incorrect, and this is the correct answer to this question, because in India a partnership firm is not a separate legal entity from its partner. The partner are personally liable for the debt and obligation of the firm. For example, if a partnership firm default on a payment, creditor can go after the personal asset of the partner. Now let's see the option C. Just wait a minute. I hope it is clear. Now option C, say that in the sole proprietorship the owner has unlimited liability for the business debt. Unlimited liability. So unlimited liability means if the business incur debt, the owner is personally responsible for paying them off, even if it means selling a personal property. Exactly. Suppose a sole proprietor run a bakery and he faces the loss. He may have to sell his car or house to settle the debt. And option D says that in a partnership firm, the partners share liability for the firm obligation. Yes, this is correct, because partners share both the profit and liability of the business. They share both. They share profit also and they share the liabilities also. So if one partner default, the other partner can also be held liable for the firm obligation. So in a partnership of 3 people, if one partner disappear, the remaining 2 are still responsible for settling debt. So the correct answer to this particular question is option number B. Let me show you again option number B what it says. Option B says that a partnership firm is recognized separate legal entity from its partner. No, this is wrong. So you should know that sole proprietorship and partnership firm are not separate legal entity. In both firm, owner or partner have unlimited liability for debt, and the incorrect statement is that a partnership firm is a separate legal entity. It is not, and partners share profit and liability equally unless otherwise agreed upon. Now let's see the next question. Under the SARFAESI Act, what is the minimum notice period that a secured creditor must provide to a defaulting borrower before taking the possession of the secured asset? Very good question it is, right? So we will break down each and every option, explaining in simple terms. So let's see the option: 30 days, 45 days, 60 days and 90 days. So option 30 days is incorrect, right? 45 days is also incorrect. So the correct answer is 60 days. Let me tell you about the section number. About the section 13 subsection 2 of the SARFAESI Act. You should know about it. This section of the SARFAESI Act, it says that the secured creditor must issue a demand notice giving the borrower. So here the keyword, issue notice and demand notice, right? Giving the borrower 60 days to repay the outstanding loan. What happens next? If the borrower does not repay or respond, the creditor can proceed to take possession of the security or secured asset under the section 13 subsection 4. So possession is listed under section 13 subsection 4, right? So here correct answer will be 60 days, right? So suppose a borrower default on a home loan, the bank send a notice, right? The bank send a notice demanding repayment within 60 days. If the borrower does not repay, the bank can take control of the property. Option D says 90 days. This is incorrect because 90 days is longer than the required notice period under SARFAESI. So the correct answer is option number C, that is the 60 days. You should remember this concept, very very important examination point of view. Now let's see the next question, that which of the following statement is not true regarding the difference between LLP and a private company in India. LLP is called limited liability partnership, and private company you are well familiar with. So option A says that LLP is governed by the Limited Liability Partnership Act, while the private company is governed by the Companies Act. What do you think? This is the correct. And you must keep in mind that not correct has been asked. This is correct. Why it is correct? Because LLP in India are regulated by the LLP Act 2008, while the private company are follow the provision of the Companies Act 2013. Now option B is, let's go to the option B. Just wait a minute, I'm coming to option number B. Yes, option number B is here. A private limited company must have its account audited annually, while the LLP exempted from audit regardless of its turnover. This is incorrect, right? This is incorrect. You should know that a private limited company must indeed get its account audited every year, right? Private limited company, or we can say PLC, must get its account audited every year, right? It should get account audited every year, right? So a private limited company must get its account audited every year, but saying LLP are completely exempted from audit is wrong. LLP are required to get their account audited. So see, LLP will get their account audited if the turnover exceed 40 lakh. So the condition for LLP to get account audited is that turnover should exceed 14 lakh or their capital contribution exceed 25 lakh. Capital contribution should exceed 25 lakh. For example, imagine an LLP making 50 lakh in turnover. Suppose an LLP is making 50 lakh in turnover. So it must get its account audited even though it is not a company. So the statement claiming LLP are fully exempted is incorrect. You can see what is it claiming. The statement is claiming that LLP is fully exempted from audit. No. How it is possible? They are not fully exempted. Option C says that a private limited company can raise equity capital from investor, where LLP cannot issue share to raise equity funding. See, private limited company can issue share to raise fund from investor, right? They can issue share. They can issue they can issue share. For what? They can issue share to raise fund. To raise fund from where? Investor. So they can issue share to raise fund from investor. On the other hand, LLP can't issue share. LLP cannot issue shares. Funding comes through partner contribution only, right? And so this is also what is say LLP cannot do. Yes, this is also correct. An LLP partner have the flexibility to manage the business directly, while in private limited company, director manage the private company on the behalf of shareholder. What do you think? Is it correct? Option D. In LLP, the partner manage their day-to-day operation directly. In the private limited company, director handle management on the behalf of the shareholder. So the correct answer is option number B, right? So you should know that private limited company must have account audited annually, while where in case of LLP, this is wrong. So let's summarize the fact. They are governed by the different act. We know it about it. LLP needs audit if turnover exceed 40 lakh or capital exceed 25 lakh. Private limited company must get audited annually. Always. Private limited company can't issue share. Private limited company can issue share, but LLP can't issue share. And LLP partner manage directly. Company have directors. I hope this makes the concept clear. Now let's jump over to the next question, and which is a very nice question, right? It is based on which of the following is not one of the 5 C's of credit used by lenders to assess a borrowed credit worthiness. Not a 5. See here the word not 5, right? So the first option say character. Character is one of the borrower, right? Character is one of the 5 C's of the credit. There is something called 5 C's. Right, character refers to the borrower trustworthiness and willingness to repay the loan. For example, lender assess your repayment history through your credit score and previous loan record to evaluate your character. The option B says capacity. Capacity is about your ability to repay the loan based on your income and financial obligation. The bank will check your income, expense and debt to income ratio before giving you a loan. Then the third option we have is capital. This is another important C, right? So capital refers to the borrower own money invested in the business or asset. If you are taking a business loan, the bank will check how much of your own money you have already invested. Option D say collateral. This is definitely one of the 5 C. Collateral is an asset that the borrower places as security for the loan. And what is the option E? Let's see the option E. Option E I think is compliance. Yes, compliance is not there, right? Because what are the 5 C's? Let me remind you what are the 5 C's. The first C is character, capacity, capital, collateral, and last is condition like economic factor. There are some condition like economic factor. So the compliance, which refers to following legal or regulatory requirement, is not a factor in credit assessment. So 5 C's are character means trustworthiness, capacity means ability to repay the loan, capital means borrower's own investment, collateral means security for the loan, and condition means market or economic condition. Compliance is not one of the 5 C's. So these 5 C's plays a crucial role for credit used by lender to assess a borrower credit worthiness. Now let's see the next question. Which of the following statement is not true regarding the common seal of a company? Very nice question. Common seal, first of all, let's see the options that we have. Option A says that the common seal is a mandatory requirement for all company under the Companies Act 2013. This is incorrect. This statement is not true because that before 2015, common seal was mandatory. It was mandatory before 2015. But that Companies Amendment Act 2015 made the common seal optional for the company. Now it is optional. For example, some company may choose to have a common seal for executing official document, but it is no longer compulsion. Option B says that Article of Association may specify the condition under which a common seal could be affixed and a person authorized to do so. AOA is called Article of Association, is a document that outlines the internal rules and regulation of a company. It specifies when and how common seal should be used and who is the authorized to affix it. So this is point number B. Point number C says that MOA. MOA, it's called Memorandum of Association. MOA is called Memorandum of Association. So MOA does not typically provide provision about the common seal. So this statement is true. MOA outlines the company main objective, power and scope of the operation. It does not usually contain provision about the use of the common seal. So MOA would focus on what the company is set up to do, like selling goods or providing service, but it would not mention how to use their company. And option D says the common seal is used to execute document on the behalf of the company. So this statement is true because common seal is traditionally used to execute document and so that company official agree with the terms of the document. It serves as a company's signature on legal contract and other important paper. So the correct answer is option number A. So let me again summarize the fact which we have learned just now, that common seal is optional for company, right? Under the Companies Amendment Act 2015, the AOA can specify how and when the seal should be used. The MOE does not mention the common seal, and the common seal is used to execute legal document on the behalf of the company. I hope this make your concept clear, right? Now let's see one more question. So one more question is regarding the BEIS, which is the back end interest subsidy scheme for MSME in Tamil Nadu, for MSE in Tamil Nadu. Which statement is not correct? Which is incorrect? Basically the question is which is incorrect, right? So let's see. Let's see the correct options. First of all, first option says that the BEIS provide a 5% interest subsidy on term loan for a period of 5 years. What do you think? Yes, this is true, because this BEIS, or we can call it back end interest subsidy scheme. So this BEIS scheme offer a 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on a loan for a period of 5 years. This help ease the financial burden on a small business by reducing their loan repayment amount. Let me give you an example. Let's say a small business takes a loan of 10 lakh. Right, 10 lakh a business loan is taken by a small business. So if they qualify for the subsidy, they will only pay 5% less in interest for the next 5 years. So again I am repeating that BEIS scheme offer 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on loan for a period of 5 years, right? Let's see the option number B. So which statement is not true it is asked, right? Option 1 is correct. Now option B, let's see. Option B says that a maximum subsidy amount is 20 lakh for loan up to 2 crore and obtained under the CGT MSE. So CGT MSE. So the maximum subsidy, yes, this is also correct. The maximum subsidy under BEIS scheme is 20 lakh, which is applicable to loan that are up to 2 crore, and a loan must also be obtained through the CGT MSE, right? CGT MSE design. For example, suppose if a business take a loan of 1 crore under the CGT MSE, they could get 5 lakh subsidy, 5%, right? For larger loan, they could get up to 20 lakh as a maximum subsidy. Now the next option is that BEIS is exclusively available for new micro and small manufacturing enterprise. So this is also true. This BEIS scheme is only available for the new micro and small enterprise, and it specifically target the manufacturing business. This means that only manufacturing business which are starting or are new can apply for this subsidy. Option D is incorrect, because this is the correct answer here, because BEIS is applicable to all micro small enterprise service business. This is wrong, because BEIS is not applicable to service based business. Here it is written service based business, and you should know that BEIS does not apply to the service based business.
Question is, where is the headquarter of NEI's BOD located? First option say Mumbai. Mumbai is a financial capital of India, right? So it is home to major institutions like RBI, SEBI, BSE, but any NIE's BOD is not a headquarter, right? Then Hyderabad, this is also incorrect. This Hyderabad, it is a famous IT and pharma hub like Google, Microsoft, TCS. So these are placed in Hyderabad, but NIE's BOD is not there. Noida is the correct answer. So the headquarter of NIE's BOD is in Noida. It is an apex body under the Ministry of Skill. You must know it is under the Ministry of Skill Development and Entrepreneurship. It is MSD. We call it MSD, Ministry of Skill Development and Entrepreneurship, right? That promotes entrepreneurship and skill development. Kolkata is also incorrect answer. So you must understand that the moral of this question is that NIE's BOD headquartered is Noida or on Uttar Pradesh, and it works under Ministry of Skill Development and Entrepreneurship. It focuses on entrepreneurship and skill training, right? So that is the correct answer. Option number C is the correct answer. Now the second question is, camel is used for evaluating the performance of, right? You might have heard about this camel. This is an acronym, right? So friends, option A suggests mutual fund, option B bank and financial institution, stock market, insurance company. So please, do you know what is the correct answer? Option A, mutual fund. Mutual fund pool money from investor to invest in a stock, bond and other asset. So they are evaluated based on returns, expense ratio and risk factor. This is not the correct answer. The correct answer to this question is bank and financial institution. Yes, the camel rating system is used to evaluate banks and financial institution. So sometimes question may be asked regarding full form. you must know the full form of camels. What does C stand for? Do you know what does C stand for? C stand for capital adequacy. Let me write down the important point. So C stand for, C stand for capital adequacy. What is the meaning of capital adequacy? Means does the bank have enough capital to handle the risk? This is called capital adequacy. What about A? A stand for asset quality. A stand for asset quality. What is the meaning of asset quality? See, are the bank loan and investment safe? That is called asset quality. M stand for, management efficiency. M stand for management efficiency, which means is the bank leadership good? Then E stand for, E stand for earning. What is the meaning of earning? That is the bank profitable. And this L stand for liquidity. Liquidity, you know it very well, that does the bank have enough cash to meet obligation? So just like doctor check your health using blood test, camel rating check a bank financial health. C for capital adequacy, A for asset quality, M for management efficiency, E for earning, and L for liquidity. So you must remember this formula, this full form, very very important. If we talk about option number C, that is stock market indices, this is incorrect. You know some indices like Sensex, Nifty, and so they track the performance of group of stock, right? These are tracked by indices. So the performance depends on factor like market trend, investor sentiment, economic condition, not the camel system. And insurance company, they are evaluated. Their insurance company are evaluated using solvency factors, solvency ratios, claim settlement ratios, and IRDAI norms. So the final summary is that camel rating system is used for bank and financial institution. 5 key components are there: capital adequacy, asset quality, management, earning, liquidity. Right? That is the point. Now let's see the next question. Question number 3 is on your screen. As you can see, it says that the 5C are primarily used in which area of banking? Yes, you must be aware of this 5C, right? So they are used in which area of the banking, right? Option A, risk management. What do you think? Risk management in bank focus on identifying, analyzing, and reducing the risk. What we do in risk management, in risk management part, what we do, we first identify, then we analyze, and then what we do, we reduce the risk. Right, like market, credit, operational risk. So while credit risk is a part of risk management, the 5C are specifically used in credit appraisal. So just like doctor checks your medical history before giving medicine, a bank check a borrower credit worthiness before granting loan. But this is a part of credit appraisal, not overall risk management. So this is wrong. Option number B say credit appraisal. This is the correct answer. So this 5C's of credit are used in credit appraisal, where bank assess whether a borrower is eligible for a loan. So let us simplify what are these 5C. The first C, is character. The first C, is character. What is the meaning of character? That means when I say character, it means the borrower past credit history and repayment behavior. The second C, is about capacity. Capacity, what does it capacity means? Means the borrower ability to repay the loan based on income and existing debt. The third C, is about capital. What is the meaning of capital? Like the financial strength of the borrower, including their own investment in the business or project. The fourth C, is collateral. Collateral, you know it very well, that asset placed as security for the loan, like property, gold, or fixed deposits. And the last C is about condition. So economic and market condition affecting the borrower ability to repay, right? So let me give you an example to make it more clear. Imagine a bank giving a home loan. So they will check your salary. So your salary, first of all they will check your salary, right? So your salary is like your character, right? So character means salary means your capacity, not character. Just wait a minute. Let me write down in correct place. So salary is just like your capacity, right? Salary is your capacity, right? Then they will also check your credit score. So credit score, so what is credit score? Credit score is like your character. Your score is like your character. Also your saving they will check. So they saving your like your capital, right? So they will also check, they will also place your house as security. So that is this house your collateral. And the real estate market will also check, that is called condition, before approving the loan. Option number C, CRM. This is wrong. That CRM is about managing relationship with the customer to improve service and business growth. It focuses on customer feedback, complaints, and engagement, not loan approval. For example, if you visit a bank for a loan, the CRM system helps track your queries, but the loan approval depends on 5 C's of the credit. Option D says treasury operation. This is wrong, because treasury operation in the bank manage cash flow, investment, foreign exchange, and liquidity. Treasury operation handle how much cash a bank has for lending, but who gets the loan is decided through credit appraisal using 5C. So what we learned from the discussion is that 5C of credit are used in credit appraisal to assess loan eligibility. 5C means character, capacity, capital, collateral and condition. It is not related to risk management, customer relationship management or treasury operation. I hope this makes sense to you. Now let's switch our focus to our next question, which were asked on 8 March examination. The question, as you can see, if an individual civil score is 750, what is the associate risk category? So before going into this question, let me tell you that if you are looking for MSME study material, we have a fully fledged course on MSME, from where students have cleared the examination, which have recently been held. Right, in this course you get unit wise theory PDF, unit wise MCQs PDF, as well as previous year question, right, which provide you sufficient knowledge to equip you to the with the knowledge, so that you can easily crack the examination. So if you want to get detail regarding it, you can WhatsApp me on this particular number, right, 82857381, to get more detail regarding the course. Right, so the link of the course is also provided in the description section of this particular video. Now let's come back to this question. So friends, this question is about a civil score and risk category. So option number 8 suggests high risk. So if we talk about the high risk borrower, a high risk borrower is someone with a poor credit history, meaning they will have defaulted on loan, or they will have very low civil score, especially below 650. So bank hesitate to give loan to such individual. For example, imagine you have a friend who always borrow money but never repays on time. Would you lend them money again? Of course not. That is exactly how banks see high risk borrower. So a civil score of 750 is not considered high risk. So option is wrong. Normal risk. Yes, this is correct. So civil score of 750 falls under normal risk category. People in this range have a decent credit history, meaning, so let me write down, this is the key point, they have a decent credit history. It means that they pay their EMI, they bill on time, bank feel comfortable giving them loan, right? So you must know that if the credit history, if the civil score is in this range, 300 to 649, it means high risk is there, risk is quite high. And if it fall in 650 to 749, so this is basically normal risk. This is basically, we can call it normal risk. And if it is 750 plus, it means that low risk, right? So for example, if you have civil score of 750, it's like being a responsible student who will submit homework on time. Your teacher, that is your bank, trusts you more than and gives you more better opportunity. Option number C is a low risk. Yeah, this is wrong, because typically have a civil score above 800. These people have excellent credit history and get the best loan offer with lower interest rate. And very high risk, this is also incorrect. Why? Because the very high risk borrower have a civil score below 500, and these individuals have frequent default, missed EMI or loan settled with bank instead of full repayment. Right, so if a student never submit assignment and fail at test, teacher won't trust them with responsibility. Similarly, bank don't trust borrower with very low credit score. So the final summary from this discussion is that CIBIL score is a measure of credit worthiness ranging from 300 to 900. Right, 750 plus is a good score and fall under the normal risk category. High risk below 650, normal risk 650 to 750, 749 to be more precise. Now the next question is, which of the following is a primary role of KVIC? Very important question. What is KVIC? Khadi Village and Industries Commission. So what is the important role of KVIC? So this question is regarding KVIC. Option number A, promoting large scale industrialization, generating rural employment through khadi and village industry, obviously regulating foreign trade policy, and obviously B number option is correct, because KVIC, which was established under the Khadi and Village Industry Commission Act 1956, is a statutory body focusing on promoting and developing khadi and village industry to create employment opportunity in rural India. Right, strengthening the rural economy, preventing migration to urban area, and supporting decentralized economic development through skill development, technology transfer, R&D, and marketing initiative. Very easy. Now this is very important question. This question is regarding to PMEGP, Prime Minister Employment Generation Program. Who is eligible to apply for financial assistance under PMEGP? Very important question, that who can apply for financial assistance under PMEGP. So friends, PMEGP, Prime Minister Employment Generation Program. So option number A, an individual above 18 years of age with at least 8 standard pass for manufacturing project above 10 lakh and business service project above 5 lakh. So PMEGP is a government scheme that provides financial assistance. So when I say this financial assistance, what I mean to say is that it provides you subsidy and it provides you loan. Two things it provides, subsidy plus loan. Right, who can apply? Any individual above 18 years of age. If the project cost is above rupees 10 lakh for manufacturing or above 5 lakh for services, right, the applicant must have at least 8 standard pass. Right, and there are some other eligible group also. Right, SHG is also there, production based cooperative are also there, and charitable trust are also there. Let me give you an example. Imagine a person named as Raj. Imagine a person named as Raj want to start a furniture making unit costing rupees 12 lakh. He want to start a furniture making unit which costs rupees 12 lakh. Since this manufacturing project is above 10 lakh, he must have at least 8th grade education to qualify for this. That means option number A is correct. Option number B suggests only SHG and cooperative society. See, SHG, self-help group, society and cooperative can apply. They are not the only eligible entity. For example, if Ramesh as an individual want to start a grocery store, he can apply alone without being in SHG or cooperative society. Since PMEGP is not limited to just SHG and cooperative, that's why this option is incorrect. Option number C suggests existing unit under PMRY, REGP or any other government scheme. So PMEGP only fund new business, new product, new project are allowed. Existing units that have already received benefit under PMRI, you know what is the meaning of PMRY? That is Prime Minister Rural, it is a Prime Minister Rozgar Yojana. REGP, you know what is REGP? Rural Employment Generation Program. So existing unit that have already received benefit under this program, they cannot apply again. For example, if Suresh already received a subsidy for his small textile business under PMRY, he cannot apply for another subsidy under PMEGP. Option number D, any unit that has already availed a government subsidy under any other scheme. This is also incorrect, because if someone has already taken a subsidy under another government scheme, they cannot apply for PMEGP. For example, if a company got rupees 5 lakh subsidy under Stand Up India, it cannot apply for another subsidy under PMEGP. So what we learned from this discussion is that PMEGP provide financial assistance for new business. Individual above 18 years can apply. For large project, 8 standard pass is required. Self-help group, cooperative, charitable trust also eligible. Existing unit that have already received subsidy under other government scheme, they are not eligible. Right? That is why fully fledged understanding is very much required. That's why I explain each and every option, so that you must understand what are the pros, what are the eligibility. Remember, this eligibility is very important. You can see eligibility written here. Right, now what is the minimum and maximum number of partner required in LLP? This is another good question based on which we are asked. What is LLP? Limited liability partnership. Option number A, minimum 2 partner, maximum no partner. Yes, correct. So what is the act? What is the act name? This is called LLP Act 2008. So it says that every LLP must have at least 2 partner. There is no maximum limit on the number of partner. There must be at least 2 DP. What is the meaning of DP? DP means designated partner, and at least one must be resident of India. Let me give you an example. Suppose 2 friends are there. One is Amit and other is Raj. So these 2 friends want to start an IT consulting firm together. So they can register as an LLP with just 2 partner. Later they can add more partner without any upper limit. That is why option A is the correct answer. What about B? 3 and 50? This is wrong, because LLP require minimum of 2 partner, not 3, and there is also no maximum limit on LLP. So if only 2 people want to start an LLP, they can legally do so. The law does not require 3 partner. Minimum 2, maximum 200. This is also wrong, because a private limited has maximum limit of 200 shareholder, but an LLP does not have such restrictions. So you must know, if it has been private limited, then this option would have been correct. But since it is LLP, they have no limit on maximum number. 5 and 500. This is also incorrect. Right? So what we learned from this discussion is that LLP requires a minimum of 2 members or 2 partners to be registered. Remember it. So it should have at least 2 partners. Right? And that there is no maximum limit. There is no maximum limit on the number of partner in an LLP. At least 2 partner must be designated partner. DP, we call it DP. Right? And one must be resident of India. This is another condition. One must be resident of India. You must note it down. Right? And LLP are different from private limited company, which have maximum limit of 200 shareholder. Private limited company, they have a restriction of 200 shareholder max. That's it. So we can see we have learned 4 concepts from this particular question. That is the beauty of this learning, right? We don't only learn what is asked, we learn something different which may help you in upcoming examination. Now the upcoming question is, what is the full form of NIES BUD? I told you about NIES BUD in the first question. Remember it? Now it's full form. So friends, option A, it suggests National Institute of Employment and Skill Based Development. This is wrong. Right. Option B says that National Institute of Entrepreneurship and Small Business Development. Yes, it is correct. Very good. It is correct. Option number B is the correct. So let me talk you something about this NIES BUD. I told you it is under MSDE. MSDE, Ministry of Skill Development and Entrepreneurship, Government of India. Its headquarters is in Noida, Uttar Pradesh. It plays a major role in training and promoting entrepreneurship and small businesses. It provide workshop, training program, skill development initiative. Let me give you an example. Imagine you want to start a small business. Suppose that you want to start a small business, right? But you don't know how to get funding, market your product, or manage account. So NIS BOD provide you training program to help you learn all these skills, right? Option number A is wrong, right? So option number C is also, so option number B is the correct. I hope we don't require explanation of all the option, because only one option is correct, which is entrepreneurship. Now let's switch our focus to the next question. Very good question. Which of the following is not a component of new MSME champion scheme? Very important question. You know about this new MSME champion scheme? MSME sustainable JDD, MSME innovative, MSME competitive, MSME export promotion scheme. Correct answer is MSME export promotion scheme. So you must remember that this champion scheme consists of three main components. When we first component is MSME sustainable JDD. What is JDD? Zero defect practices to promote sustainable and environmentally friendly manufacturing. This is called zero defect practice. The second part, you know, is called MSME innovative. What is innovative stand for? Incubation, right? It support incubation, intellectual property right, designed to encourage innovation to in MSME. And the third is competitive. It aims at improving efficiency, competitiveness through lean manufacturing technique. So you must understand these three parts of this champion scheme, right? So this promotion scheme is not a part of champion scheme. Now the next question is under the TechUp means technology and quality upgradation. What is the maximum financial support provided by Government of India for implementing EET, that is energy efficient technology? Very important question. This was asked in March 3rd examination, March 8th examination. So friends, how much financial support does the Government of India provide under this scheme? So friends, option number A suggests 50% of the project cost up to 20 lakh. This option overestimates the government financial support. The scheme does not provide that much, right? Option B, 25% of the project cost up to 10 lakh. Yes, this is correct. So first of all, you must know that TechUp scheme is a part of National Manufacturing Competitiveness Program, which is called NMCP. What is NMCP? National Manufacturing Competitiveness Program, right? It aims to help MSME adopt energy efficient technology, that is called EET, right? EET to improve their production process, and the government provide 25% of the project cost with a maximum cap of 10 lakh per project, right? The project must show at least 15% energy saving to qualify for funding. The project must show at least 15% energy saving. For example, suppose a small factory want to replace old machine with an energy efficient one costing rupees 40 lakh. So a small factory want to replace old machine with energy efficient one costing 40 lakh. Under this scheme, 25%. What will be the 25% of 40 lakh? Please let me know in the comment section. So 25% of 40 lakh means 1/4 of 40 lakh, which is nothing but 10 lakh. So the 10 lakh is the maximum support which allow. Means the government will allow, provide 10 lakh and the business owner will arrange the rest. That's why option number B is correct, right? Up to 10 lakh. Option number A suggests 50% of the project cost up to 20 lakh. This is incorrect. For example, if MSME apply for 20 lakh in funding, the government will only approve 10 lakh, not more. Option C, 100% of the project cost. This is also incorrect. So if a business want to install solar panel costing rupees 4 lakh, the government will only contribute 25%, that is 1 lakh, not 4 lakh, and no financial support. This is also incorrect, right? This is completely wrong because the government does provide funding under TechUp. If MSME has to bear the entire cost of upgrading machine, many small business would not afford it. That is why government steps in. So what we learn from this question, let's summarize finally. So let me give you the summarization here. You know, this TechUp scheme is a part of NMCP. What is NMCP? National Manufacturing Competitiveness Program. First point. Second point, it helped MSME adopt EET, that is energy efficient technology. Second point. Third point, that it government provide 25% of the project cost up to rupees 10 lakh. Fourth point, the project must show at least 15% as per the DPR, as per the detailed project report, right? I hope that makes sense to you. Please hit the like button if you really think that till now your concept is clear, because it takes lots of effort to gather all this information, to collect the information from the students who have given the examination and provide you input. Now let's see the next question. Under which legal framework are SSIDC typically registered? You know what is SSIDC? SSIDC stands for State Small Industrial Development Corporation, right? Option A, Companies Act 1956. Very good, that's the correct answer, right? You know, SSIDC are government owned corporation. First thing first, they are government owned corporation, right? They are set up by state government. Who set them? They are set up by the state government. Why is state government set them? To support and promote a small industry, right? To promote a small industry, right? They are typically registered under the Companies Act 1956, which provide them with proper corporate structure. So this helps them function as organized corporate entity. The main activity includes, providing land, providing machinery, providing raw material. To whom? To a small industry, right? It helps MSME with financial aid. For example, suppose a state government want to help businesses in its region. So instead of setting up multiple small agency, it register SSITC under the Companies Act. This make it a structured organization with a clear objective and rule. Option number B, Indian Partnership Act. This is incorrect, because SSITC are not partnership, they are government owned corporation. For example, a small textile shop run by two partners under a verbal agreement come under the Partnership Act, but a state industrial corporation need a strong legal structure. That is why it is registered under Companies Act. Option C, limited liability partnership. This is also incorrect. LLP are privately formed business, while SSITC are government owned organization. So if two professionals like CA firms or law firms want to start a business together with limiting their liability, they can register under the LLP Act. And what about the Cooperative Society Act? This is also incorrect. That in this act, member pool resources for mutual benefit. So SSITC are not cooperative. So what is the final summary? What we learned from this discussion is that, let's summarize the fact. So this is the learning. So SSITC is a government run organization that promote a small industry. They are registered under Companies Act, right? The correct answer is option number A. That's it. Now let's look at the next question. This question is regarding TUF, that is Technology Upgradation Fund, is primarily implemented in which sector? So I will tell you every information about this TUF, Technology Upgradation Fund. So option number A, textile. Yes, very good. It is T for textile, T for TUF. This way you can remember. It is a government TUF. It is a government scheme. First things first, it is a government scheme, right? It is a government scheme that modernize the textile sector. It provides financial assistance for upgrading machinery, for adopting energy efficient technology and improving productivity. And Ministry of Textile, right? Ministry of Textile launched this scheme to help Indian textile industry compete in the global market. For example, imagine a small textile factory. For example, you can imagine a small textile factory, right? Using old weaving machine. So with TUF support, the factory owner can buy modern automated tools, looms at a lower cost. This increase production speed and quality, helping business grow. Option B, food processing. This is incorrect. Food processing, there are some scheme like PM Kisan Sampada Yojana, Mega Food Park scheme. So TUF is not related to food processing. Automotive, this is also wrong. There is some scheme called FAME scheme. You might have heard about this FAME scheme. What is FAME scheme? That is faster adoption and manufacturing of electric vehicle, right? So a company making electric car will get benefit under FAME scheme, not TUF. And for IT, there is something scheme called STPI. STPI, Software Technology Park of India, right? So the final answer is, textile. T for textile, T for Technology Upgradation Fund. This way you can remember it. Now, what does UNIDO stand for? So its full form is United Nations Industrial Development Organization. I am skipping this question because it is very easy. Let's look at the next question. Very, very important. Which of the following best describe the purpose of asset turnover ratio? Right, asset turnover ratio. So the question is, what does this ratio tells us and why is it important for businesses? So option number A suggests that it measures a company debt relative to the asset. This describe the debt to asset ratio. So option number A describe, debt to asset ratio. It describes debt to asset ratio, right? The debt to asset ratio tells us how much of a company asset are financed through debt. Let me give you an example to make it more clear. For example, if a company has 1 crore in total asset, and rupees 50 lakh in debt, so the DA ratio will be 50%. So this does not measure efficiency in generating revenue. So option A is incorrect. Option B suggests it indicates how efficiently a company uses its asset to generate revenue. Yes, this is the correct answer. This is what is the purpose of asset turnover ratio. So this asset turnover ratio, it tells us how efficiently a company is using its asset. So suppose this is the company, it is using its asset to generate revenue. So the formula of asset turnover ratio is net sale upon average total asset. Net sale upon average total asset. So higher ratio means the company is using asset efficiently to generate the sale, and lower ratio may indicate underutilization of asset. For example, let me give you an example to make it more clear. Suppose there are two shops selling mobile phone. This is shop A, this is shop B. So shop A has asset worth rupees 10 lakh and shop B also has asset worth rupees 10 lakh, but shop A generate 20 lakh rupees in sales
and shop B generate only 8 lakh in sale. So shop A has higher asset turnover ratio, meaning it is using its asset more efficiently as compared to shop B. That is why option B is correct. Option C, it reflects the company profitability by comparing net income to total asset. Option number C. See, this is called ROA. When I say ROA, return on asset, it is nothing but net income, that is called net profit upon total asset. This is called ROA. This is not called asset turnover ratio. So this tells us how much profit a company earned per rupee of asset. For example, if suppose a company has 10 crore in asset, suppose a company has 10 crore in asset, and suppose it earned rupees 1 crore in net profit. So what will be its ROA? It will be 1 crore upon 10, or we can say 10%.